My mic wasn't on, was it? There's something strange here. Mic was on, good. Shit. Probably not out there in YouTube land. Okay, well. Well. This PX broke the 200. Nice little pullback. Bam. Spy's a monster. Choppy on the way up, but every run's been better. We had a double top here in the pullback. So let's see. 3 white soldiers. We've pulled back to right to support. Okay, well. NVIDIA's got a little pullback here, little wedge. Tesla bounced on the double bottom at 414. I wish I was around to see some of this. China, Baba holding up from after hours yesterday. We had CrowdStrike. We got a fallen wedge on CrowdStrike. We got yesterday's high for the SPY. Right around 759.50, maybe a little bit above it. Oh, there it is. Yeah, it's descending. Oh. Oh, that's a pretty good drop. Just get rid of you. Come on, baby. Smack. Bam. Now that one looks more recent. Wow. Huh. Alrighty. I had technical difficulties today. Man, look how pretty that is. That SPX run. Sucks not having your platform. 7620s. I ain't jumping in them. Not after this. I'm surprised it ain't up more. Look at that breakout. SPY even broke resistance. What's this about Rubio here? Yeah, more hogwash. I'm here. It's going to take him a year just to build the platform back. on space. Oh, what happened here? Did I miss something? Wow. There'd have been $100 right there. If I'd have jumped in that trade, 76.20s. But I said no. Wow. We got a double bottom inverse head and shoulders here on the video. Now I feel like I need to go get something to eat. I'm in shock. Okay. I gotta get me a trade in. Just doesn't work like this. And I worry about my account. Been trading too much, Jim. We gotta slow you down. You're bankrupting us.
Closer to 5% now in real time, but the company provided a business back,
trading the king on his throne. Punta Cana's gone now, he's back in his zone. $40 for a hooker, he'll never forget. Some deals are shady, but fewer regrets. Markets of money, make a turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Jim's the ruler, got accounts to increase. Charts on the screen, the market will tank. Chai tea in hand, and he's ready to bank. Numbers dance on in the chart like a hot Vegas night. Waiting on bull flags like they're gonna take flight. Markets of money, make a turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Jim's the ruler, got accounts to increase. Refocused and dialed in. Got a market to conquer and we're ready to win.
Oh, shit.
Punta Cana was a blast, but it's now in the past. The market is his bitch, hit the money making switch. The king's got swagger, he'll never fall. When the bell rings, we're making money for all. Markets of money, make a turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Jim's the ruler, got accounts to increase. Markets of money, make a turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Jim's the ruler, got accounts to increase.
Yeah. Yeah. I'm here. Now we just hit the 21 here on the SPX. Now for this to hold, to stay bullish, we'll come back and squeeze again. So the setup gives you about a 70% chance of a win. Do you understand? These are the 76.20 calls. And he's looking at them here at $4.60. Oh, there it is. 460. The crowd's kind of scared a little bit. So is Jimmy. Trying to make a business decision. Oh man, that's one hell of a candle. You can do it. You can do it. Strike might change. Right now we're looking at the 76.20s. Oh, damn it. I missed it. Oh. 76. I could have got it for 460. That'd been a fast scalp. At least we know it respected the 21. Damn. Dadgummit. There have been 120 triple top. Now we have a triple top. So, oh. We showed some authority. That was just not a break. I mean, it could have stopped under, but now it's showing some authority. Oh, no. $460 to $660, 80. And what I've got, probably just one, maybe. Now you have 3 white soldiers. Hello? Is that true? You just missed a trade? I could have got it. So I think the situation now is that I've had probably a cup of coffee in there getting cold. I know I have. I'll be right back. Oh. Got to regroup. That could have been my first trade of the day. We got cleavage.
I think what you have to look at is what's leading right now is probably going to lead after the correction. And the reason why I say that is some of the reasons for these parabolic moves to us is because they're under-owned. That means people missed them. So any type of news, you're seeing a tremendous amount of flows and option flows go into these names. So the playbook would be the same. You want to gross up on small caps if you have the right risk tolerance, as well as semiconductors. Now, we are adding software. We think software has bottomed. We have not owned software in our tactical strategies in a while. We took that capital and went somewhere else. But now we think the IGV, for example, of an ETF, we bought that this morning on the dip. So software, the semis, and then again, you want to broaden out. You can look at the industrials as well, too, because the economic boom that we're going to see, I think if you concentrate in those areas, you can generate a tremendous amount of alpha for your clients.
So you mentioned the move into software, and I want to take a closer look at that because obviously there's a lot of differing opinions about software and its future right now in terms of the market What is signaling optimism to you? Why do you think we've hit a bottom here? I mean, we get into these conversations where management is saying software is not going to beat alive AI, but then we are seeing some of these software companies seemingly being disrupted at a minimum by AI.
Well, I would argue they've already taken a beating. I mean, when you take a look at things like Salesforce and Microsoft, these are big names, and Palantir, and how much of a drop they took from their August highs of last year. I would say that really bad news was already priced into the stocks as they sold off quite a bit. And now, from a technical perspective, some of them are back above the 50-day moving average, and looks like they're trying to bottom. So I would argue the software saw the bear market because of those fears of them being obsolete, and now they have a lot of catch-up to do. And a lot of times you'll see that happen. Last year was the same story, except the opposite. We sold some of our Palantir and Microsoft last August and rotated into names like Apple that had underperformed because they had to play catch-up. And that's essentially what happened, and now we think the opposite will happen, where software is so hated and so much pessimism and under-owned because of the rotation of semis, that rotation of software will allow it to catch up. They're still in negative territory on a year-to-date basis relative to other names. It's one of the widest divergence I've ever seen in technology.
And Eddie, last question here, and I'm kind of jumping back to something you said in an earlier answer, but if we're watching the 10-year closely and you think it's going to kick higher again as we see inflation rise, my last question is, what is your expectation for the Fed meeting? I mean, we're now 2 weeks away from Kevin Warsh's first as the head of the Fed meeting and potentially press conference. We'll likely hear from him. What's your expectation there?
Well, June 10th, we're going to get a CPI number that's probably going to be hot again. And I think my expectation for him is he's not going to cut rates. And he's going to be looked at under a microscope, which is going to cause a lot of volatility because, you know, I think some people thought that he would automatically come in and cut rates and be extremely dovish. And I don't think the data is going to allow him to be dovish. So I don't think he's going to cut rates in this meeting, but his outlook for the rest of the year to us is going to be a very telling story. And if he disappoints the market, that's going to cause some volatility as well, too. So there's a lot of dynamics in an overbought market that could cause some indigestion here this summer. But there'll be opportunities in that indigestion time period.
Eddie, really appreciate you being with us. Always such a pleasure to talk to you. Eddie Gabor from Key Advisors Wealth Management. And we've got a lot more for you today on Trading 360, so don't go anywhere. We've got the big three coming your way next. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat will take us through the technicals. Mike Shore is joining us to take us through his trades for Applied Optoelectronics, Kratos, and GE Aerospace. That's next on Trading 360 on Schwab Network.
Okay, here we go again. The Do It Muse. 76.20s at $6.20.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live in the NYSE, right when it counts.
Don't stop. Just give me a little bit.
Aw, she's got your smile.
Carl.
Yep. The number one broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need.
$6.50.
I can set up her college
I can
fund.
sell it
I'm
here.
learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody
Making me
need
cranky
that?
too. Watch out.
Invest your way with Schwab.
76.20s. I took a nosedive at 620 and then went up to 660. Now they're at 640. So I'm debating on if I should just sell it, have my first trade in. If I can just get one little bitty pop here, it'd be well worth my while. I can get out now at 660. Okay, here we go. 680. Now I'm happy with that. Boom! My name's Washboardjim. I just rattled it with a 690 right there. Yep, I did it. All by myself. Made $70. That's how you do it. A plus, please. I'll take an A plus. A plus for having a ball steals. A plus, yes or no? I say yes. I'll give that man a yes. Now we're at a double top. Jim, you sold it at 690. Do you know that it went to 720? It would have been well worth your while if you had held it on just a little bit longer and succeeded the double top. I say I voted. I was the first one to vote. Alrighty. That's how you do it. So I decided to have some soup. It was frozen. So I'm cooking ice soup. And I'll check it out real fast and see where we are with it. No. It's going higher. It's not supposed to do that. Apple new high, Apple new high, Apple new high. Okay, well, I don't know. I think it's a pretty good call, but I didn't stick with it. Woo! SPY new high. SPX new high. New highs. I'll be right back.
for a move. Let's see, we want to get above what? 320. I'm sorry, yeah, 324.60. 324.60. We got a lot of clean air above that if we do.
Clean air.
So I'm looking at, again, something pretty straightforward. 340, 350 call spread for regular June. I'm going to buy that at 220. Again, my risk is 220 because it's a debit spread. You can't lose more than what you made on it. And then, but I can make 780 on that. Again, 3.55 to 1 return to risk.
All right, so if we're looking for 324.60, we're almost exactly $4 off of that right now. Rick, as you look at the technicals here, take us through what you're seeing.
Right, the decision to break up GE kind of stands out as what's played out mostly to the upside for all three of the child companies that have formed. GE, in this case, a bit more sideways during this past year, but really strong during the past several years. And now what we see here was a decline from those highs near 348.48, connecting the subsequent highs that were progressively lower. But now we've had a breakout to the upside. This is those that high area near about 326 Mike was referring to. 333 old high stands out as a potential resistance area. Obviously, then our old intraday highs near 348 as well. To the downside, though, 314. Highs around where we topped out here, lows, resistance here. That stands out as a potential area to look for support if we do start to break through our short-term, rather steep upward sloping trend line here in white. When we think about our moving averages, in this case now, our 5-day EMA in dark blue comes in at 319.58, which lines up with our trend line pretty closely. Then we have a bit of a confluence here. They're not exactly on top of each other, but our 21 and 63-day in teal and gold respectively coming together around 302 to 306 roughly. So that could be another area where you have these indicators lining up to give a confluence that can be more of a significant potential source of support. RSI showing a bit of a breakdown, though. We have breached our upward sloping trend line in green here, but RSI is the secondary indicator. Price is the more important one. You shouldn't just base decisions on one indicator alone in general, too. You kind of try to use them to flesh out a more complete picture of the stock as a whole. Volume profile shows that we have a concentration of trading between 290 to 313. Our point of control comes in at 298. Things start to pick up again up here between about 336 to 334. So when we do start to push up to that level near those old highs, that stands out as a potential hurdle that the bulls would have to clear.
All right, right now we are at 321.06, down about 1% for GE Aerospace, but in the last 52 weeks, up about 30% for that name. Mike, really want to thank you for being with us for Big Three and bringing those picks to us. Mike Shore from Prosper Trading Academy, and of course, thank you to Rick Ducat, our lead market technician, for always breaking down the technicals for us. Coming up next, we are going to spotlight quantum computing and which stocks you might want to have on your radar in that group. Trading 360 will be right back.
Moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad.
No.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
Man.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight quantum computing and what the future holds for the space. Joining us now to help break it down for us, Antoine Legault, Vice President of Equity Research Hardware at Wedbush. Antoine, great to have you on the show. Now, as we look at the quantum space, they've had a tremendous run of late. What has changed for investors to suddenly be paying attention here?
No, absolutely, and thanks for having me on the program. What we're seeing now is a convergence of multiple industries, right? So we had NVIDIA back in April releasing their quantum AI models, which was a catalyst for the space, and then you also had the U.S. government putting $2 billion of capital, of fresh capital, into the space, into a portfolio of 9 quantum computing companies. And even more recently, we're seeing Foxconn, one of the world's largest electronics manufacturers, pointing to around 2030 as being the year to circle on your calendar as the expectation that broad commercial adoption will be there. So when you see the convergence of that many industries and that many leaders converging on new technology, in our view, that's when the beginning of new innovation cycles start.
So if we're potentially less than 4 years out from quantum being a reality, have we moved past this narrative where quantum was basically looked at like a science project for years, decades even, to actually becoming a commercially viable industry?
Absolutely. So for years, this industry was known as sort of there's a lot of speculation and hype, but we're finally seeing early signs of commercial adoption across the space. So we're seeing a number of companies note that they are reaching commercial agreements with customers. But it's still early innings, but we're certainly at a sort of an inflection point where there is a path forward for these technologies to roll out and proliferate across multiple industries. So you're right that it was, for years, it was known sort of a science project. And science fiction even, but now we're at a point where this technology is taken more seriously, not only by the investing public, but by major corporations and entire industries.
And also the government. I mean, you mentioned the government backing this $2 billion in support for the quantum ecosystem. How significant was that? And also, does that give investors, from your viewpoint, more comfort in owning some of these names, or does it raise the bar even higher for them?
I think for certain investors, what we've heard is they just like to hold a portfolio or a basket of companies because they're still unsure, which one will emerge as the winner, or which few will emerge as winners. However, what the U.S. government funding means is that effectively it signals a broad endorsement of the sector as a whole. And I think investors are now thinking that the U.S. government will tailor its policy to support those investments, right? Because now the U.S. government has a vested interest in a basket of U.S. quantum companies.
And as we look at some of the names, and you said people trying to determine who the winners might be, where are you seeing, as you focus on the whole sector, where are you viewing the most potential opportunity? Who has the best positioning right now? I mean, names that come to my mind that I talk about regularly: D-Wave, IonQ, quantum computing. Who's best positioned right now?
Yeah, so that's a great question. There's certainly a very intense debate about who's got the most innovative technology, who's got the fastest system, the most accurate systems, the most error-free systems. But what we're seeing is typically a broad portfolio of quantum companies has been the preferred approach for investors. That said, I do, I would point out that IBM certainly is well capitalized and has made some very important advancements in the field. Companies like IonQ is certainly seen as a pure play leader. D-Wave as well in the superconducting camp. So there are a few companies that are slowly emerging as leaders. That said, I would say that over the next 3 to 4 years, it's likely that we'll see multiple lead changes and other companies taking leaps and bounds in terms of technological progress. So that's certainly what's expected as we close in on the end of the decade.
And Antoine, as you're looking, let's use that 2030 potential date as a time where quantum may become more of a reality than it is right now. As we're looking at that time frame, what's the biggest risk to the bullish thesis for these quantum names, and what milestones specifically are you keeping a close eye on to make sure that the industry is actually reaching the inflection point potentially by 2030?
Absolutely. So there are a few milestones to look for. The main one is sort of reaching or making constant progress. So I think the biggest risk would be for these companies to stall in the progress and not iterate and not launch their new systems. So right now there's very aggressive roadmaps across the ecosystem. Companies saying that they'll launch their next generation systems, by the end of this year, by the end of 2027, and so on and so forth. So until we get to 2030, there are multiple new generations of systems that are anticipated. I think if the development slows down, there's some companies stall, I think that'll put valuations into question, and that's one of the biggest risks is sort of technological advancements not going at the rate and pace that it's expected to continue.
That was a good one.
In the next few years. So I think that's the biggest risk.
Right
and
to the 21.
Pardon me, elevated valuations, the risk is that much higher because expectations are high, right?
And with those valuations, let's look, say, a decade out. We'll go past 2030 here. Do you think in that time frame that there's a possibility we have a quantum company, a quantum pure play that has $1 trillion valuation?
Well, that's a $1 trillion question, right? I think it's unlikely, but we'll see a quantum company reach.
Don't let her get away with that.
A valuation in the next 2 years, but is it possible to see by 2030 or 2035? I think certainly 2035 is more realistic, particularly given the importance of this technology and the promise that it holds. So I think long term, yes, I do.
I like that.
At least one or a few companies to reach that milestone. However, in the near term, the next year or two, I think it's unlikely.
Antoine, really appreciate you bringing your expertise to the show.
I do
for
too.
the insight on these quantum names and these moves that we've seen of late to the upside in this space. That's Antoine Legault from Wedbush. Coming up next, we've got the disruptors. George Tillis will be joining us to take a look at the big rally we're seeing in Generac after signing a deal with a data center operator. He'll give us the details and have an example trade for us next on Trading 360.
Into it. There's Marley. We're still trying to squeeze. Today we're having cheese chips and homemade chicken noodle soup. Some of the best soup you'll ever eat. Better than Mom's and Grandma's. Better than Soup Kitchen. $50 a bowl. Well, hot. $50 a bowl and 2 cheese chips. Jim's took one trade today. I guarantee if I didn't have that issues with my platform, I'd have had more than one. Man, this soup. I could live on a desert island or a remote island with just this soup. Have it every day, it wouldn't bother me one bit. Okay, we're at the 63 now. This is yes or no. Yes or no. It's got to hold this or it's going to be a good little pullback. The 76.20 is at $4.60. It's do or die. And it could be die because we've had so much do. Jim, you're at $5. Have you ever thought about sewing? Yes. Yes, I have. Why are you looking at the SPY when you're in the SPX? Because I'm an idiot. Major support areas too on the /ES. And it's getting ready to squeeze between the 9 and the 63 any minute. Come on. Which one do I trust? I have to trust this now. It's that easy. I can get out even. And it's now 10:45. He's down to his last chip and his few bites of chicken soup. All he got's a 63 holding him on. Yep, we can easily drop down here. She says, I tried it. Boom. Now, do I get out? Boom. Thank you very much. That was $3.60 to $5.40. While eating chicken soup, worth $50 a bowl. So I'm eating chicken soup for $50 a bowl with a cheese chip in my mouth. Called it off to 63. Had that engulfing candle and boom. I think that's an A+. A+ for the belching. Does anybody in here know how to count to 3? Wimbus? Wimbits? Tubus? Freebits. Now watch this. This is the trick. You can either look at it like this. Come on. A Wimbus, Tubits, and a freebie. We could look at it like this. When I took this bottom here. So you got a head and shoulders. You got a fallen wedge. You got a 1bis, 2 bits, 3bis, and a 1 2 freeum. Now it's pulled back to support. For this thing stay bullish, boom, to the double top. Or break each one of these here steps. But you see the head and shoulders? Why you want to get out? I didn't see that earlier. I got out because it was engulfing. But if I would have saw that, I would have said for sure. That one candle that are telling me a lot. That candle right there. That one too. Dragonfly. Higher lows. Higher, 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 and higher. Using the bodies. Yeah, I'm all choked up, man. Yeah, I've been a rock and roll star for too long. Okay. Something get ready to happen. Uh-oh. Now, you remember what I've been talking about, gravity and getting old? Being late? You always want to be early. Being late. Very good. No, I did not see them. I see them now. One of them soups where you want every last drop. Yeah. Anybody wants a cup of this, send me $60 or $50, and we'll give a discount for a cup of soup. Oh, that's so tasty. I don't think I've ever had so much joy in my life eating my own soup. Trying to remember that restaurant I ate at where you dipped your food in there in a frying pan and dip it in some kind of cheese or something. Tofu. I had fun then. CRM's at the 200 on the 1 minute. PLTR's at the 200 on the 1 minute. CrowdStrike broke the 200 on the 1 minute. AMD, ooh, Jimmy, should have traded. Yep, I missed out on that one. This time on my cheese chip, I done a couple things different. So what do we got here? NVIDIA hit my support level. Where is it? Where is it? Where is it? Okay. What to do? SPX is at 450. Oh, we missed that one too. Came down, touched the wick on that third time. Third. Yeah, that's the fourth. Oh, that'd have been a good one. Yeah, that would have been a good one right there. Slash ES getting ready to squeeze. That's starting to move up. Boom. Being this one's in here, we're going to call that the double top, and that's going to be your first, second, maybe your third resistance right there. Yeah. Trade into the shoulder, yippers. Man, that's soup. I'm only down to one more bull. This could be a problem. Washboardjim just realized he was down to one more bowl of soup. But I still have a can of sardines. I went without it for a couple months without making my Instapot soup. I got in that sardine kick. Who says I can't have them both? That's right. I was getting ready to say that, James. We also have a bull flag here. You see what I'm seeing? I just now realized that too. So this is, I know I've said it a few times. The volume's real slow. It's 12 o'clock there in New York. This is what I call fat cat time. Crowd's going wild here at the sports arena. Jim's going to be looking at the calls right now. They're at $4.60. He's talked about this number before. Let's see if we can get $4 or $3.90 or $80. Oh, it's getting close. Oh, there it is. There's 330 for a second. There it is. 330, 320. Now, get ready. $4. Oh, there it is. 76.20s, please. Look how fast that was. Come on. I won 390. Now we're above the 63 here, still being boss. There's 330. I can buy one. Now I'm getting there. Get ready to squeeze. Get ready to squeeze. There you are. Now you need to hold right there. $3.70. Okay, well, this is it. NVIDIA hit my support. But that was a while back. SPY got triggered somehow. I don't know how. According to the VWAP, we got a lot to drop. But on the 100, on SPY, where we are right now, I don't know where that line come from, but that's definitely a support of something. Probably from the top. Oh, from that fallen wedge. Well, he got it above 7,600 where he said he wanted it. Mr. Kevin Green. would have been a 330 to 380. I gotta get rid of that chart. I gotta get rid of it. Bounced right off the previous resistance. When I saw that, I was kind of relieved where I seen where it come from, but I didn't take the trade like a fool. Because that would have been it right there. Wherever I come up with that line. That don't make no sense. Unless it's on the 2 minute. Yeah. That's where it was. That makes sense. I gotta get rid of it. Oh, look how pretty that was. Yeah. That's a $120 contract. It might have been cheaper. They were $330, not $360. All right, yeah, I remember now. Okay, that's the way it is. Let's watch that one go up. So we've got a double top coming up on AMD. Snake breakout, pullback, inverse head and shoulders, symmetrical flag, head and shoulders, fallen, well, symmetrical flag. Oh, an ascending triangle for the AMD. Yeah, that would have been a good one. That would have been a good one. Yeah, the more I see on it. I can see a squeeze even from this right here, that to that, all the way across. there. Resistance, resistance, support, support, resistance, 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 resistance. I mean support, support, support. But it was acting as a, never mind. If it was under here, I could say that. Support, support, support. I think you know what I meant. No, Jim, I don't know what you're saying. Resistance, resistance, support, 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 resistance, support, 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 support. Oh, we understand now. God, Jimmy. Oh. Oh, 480. I'm not in them. They're nice. Actually, that's pretty nice. Go get a water. There's my water.
Meta Platforms after this upgrade. I mean, a pretty hefty price target up to $735, but this $600 a share level has been a good base for probably the last month and a half. If that gets broken to the downside, that could signal some more weakness. Remember, this stock got down in probably
76,
March or so, down near the
87.
525 a share level. And you know what? We're still about 24% off of those all-time highs that we saw in the middle of last year also. So yeah, upgrade warranted maybe at this point because it has lagged a little bit. But remember, the CapEx spend that Meta has, yeah, they've been growing. Their earnings have been decent the last couple of quarters. But at the same time, the monetization of the CapEx spend that they're doing, are they going to be able to turn that around into margin increases and more business moving forward? Remember, last quarter, their growth numbers as far as user base was below expectations, and that's not a good sign for further growth as they continue to spend more money on AI moving forward. I think this is going to be a tell of, how they're able to monetize that moving forward, and if their growth rates continue to slow or stagnate, because that wouldn't be a positive. But watch this key 600 level for Meta Platforms. It's got to be a good base of support, or if it gets broken, maybe we get back down towards those 550, 525 levels at this point.
Yeah, great points, especially when you think about the recovery in a lot of stocks over the past month. So they're in the tech sector. There are many who have been off to the races, and Meta's just really little change. Your thoughts, Kevin, on Meta?
Yeah, this stock traded below 600 today, traded below 597 today, despite the upgrade and the price target to 735. So it's rallied with the rest of the market, but yeah, not a great response to an upgrade here. So Meta Platforms, that's almost $200 off its recent high. So a lot of these names that are going higher and AI are going crazy. Some of these stocks are severely lagging, and Meta's one of them. Why? I think it's the CapEx spending, right? Remember, the market did not react well to their numbers when they put up CapEx spending. So, yeah, it's getting a little bump here, rally, but this stock traded below 597 this morning, guys.
Great point about that, and those levels to watch out for. It is just above. I mean, it's at 607 right now, but we'll continue to watch that, especially with what you all mentioned in terms of key support levels to watch out for on that one. We'll watch for the status update on Meta platforms. Coming up, we've got bull versus bear. The guys will get their example trades put together for Palo Alto Networks ahead of its quarterly results. We'll have more Fast Market after this break.
I think this is it again. Crowd's going wild here at the sports arena right now. Jim's noticed that we pulled back to the 21 and the 63 right here. We're looking at the 76.20s. And Fat Cats are at lunch. I just had some $50 bowl chicken soup with 2 cheese chips. And again, I did not take the trade. I didn't see how cheap they got. Or 420. After the fact, right there. Jimmy waits. I just feel like I can get a better deal. Yeah, he's waiting. 380, see? Uh-oh. This is crazy. $76.20s are at 340. There's the 100. 100. Inverse head and shoulders. Higher low. Higher low. There it is, 340. 76.20s. It's trying its best. Oh, Uh-oh. Boom. $200 EMA. Let's see how bad you are. Yeah. Come on, baby. We got a 1, 2, 3, 4. And actually almost a 5, but a 4 for sure. Oh. Fuck. Perfect. Perfect. $76.09 or $76.05. $2.80. $2.85. There it is. Oh, shit. Always clean? Hello. That situation come in hand here. You can't be doing that. Situation going down, you know, we don't talk about that much. Now you've made it all messed up. Okay, let's see what we got here. Perfect. Perfect. That's called a bull flag. Has to stay above the 200. And we're under the 9 and the 21. So we'll know something here soon. I'm going to call all these a touch. 1, 2, 3, 4, 5, and 6. 76.20 is at $2.80. So we have to do something. He's trying his best. Do it. I got a 100%. Oh, 6 people voted yes. Whoever them 6 people are, they will get $100,000 cash. Mark says yes. Right now, Jimmy's in the SPX calls, scalping the lotto. The strike is 76.20. And the alert amount is $2.80. And I have 3 of them. And I've got to hold this support. If you look closely, we're just bouncing off the 200 EMA into the cloud. That's the 9 and the 21. Now, if the 9 crosses the 21, which will be the 100 EMA, we should break it to a triple top or to a shoulder. You see your left shoulder and your right shoulder. Yeah, I just now saw that. We have to do something about this. Boom. Boom. So definitely in this here. Jim, you're up $40 a contract. Have you ever thought about selling? Jim, you're up $20 a contract. No. This is not how I planned it. This is not how I planned it. $3.80. Little problem here today. Uh-oh. He's back to $2.80. There it is. Now he's in the hole. $15. Well, we gotta watch the tape. Well, that went fast. It didn't take long. Jim, you're up $40 a contract. Now you're down 40. Now we're getting out of that flag. Your next stop's the 200 if I want to hold. Do something. School. Come on. A little bit more. And a breakout. A little bit more.
Down about 17% so far this year. But Kevin, you look at this
Skill
name,
blanket.
one of the glowing things that we always talk about when you look at a name like Ulta, which isn't, highly traded, is It's only got 43 million shares outstanding. The float is small on this one, Kev.
Oh.
Yeah,
Ulta?
When I look at something like Ulta, you mentioned gas prices, you mentioned people trading down. Well, Sephora, I'm a dude, but unless I'm dead wrong, Diane, Sephora is the higher price one than Ulta. So if you were trading down, you may trade down to Ulta. Their digital traffic is up 20% year over year, and this stock is sold off. Now, their data, like Folio's data, is not crazy bullish, but it's also not bearish. So, Tom, I did something that is in line with the 1 standard deviation expected move. But if you notice on the graph, this is profitable if it sits right in this area. So it's actually a neutral to bullish.
I am now
play.
green.
And how do I get there? The 1 week
For a split second.
540 call calendar, Tom. Buying June 12th, selling June 5th, lining up the expected move, doing the 540 call calendar. Guess what? It's trading 70 cents. The last time I checked, now it's trading maybe a little over $1 now, but it's still trading relatively inexpensive, where you can have a small amount of risk, and even if it stays relatively range bound or slightly higher, this trade will still be profitable, Tom, because with the difference between the two implied volatilities, 133 and 84, you've got a lot of room in that front expiration to decay or use theta if you don't get that move through that strike of 540, Tom.
Yep, and this kind of lines up with what Megan was given, where that, hey, you could take some exposure to the upside, and this gives it to you on a cheaper or a less expensive risk type of trade here, due to those implied volatility levels that Kevin mentioned, where you're buying out in the June 12th weekly options that expire in 10 days. You're buying the 540 call for about an 84% implied volatility, selling in the near term June 5th weekly options that expire in 3 days. That same 540 call for about 133% implied volatility on aggregate. So that lowers the entry point price on this. And you can see that here, the apex profitability at or near the 540 strike for Kevin. So it gives you that upside exposure for a low debit. And that debit you pay is going to be your risk. So if you pay 70 cents, $70 per spread to get that exposure. You pay over $1, maybe it's trading $1.20 or something. It's $120 for that upside exposure. Now you've got 2 break evens on this, right? So anything maybe around the 500 level up to maybe the 590, 600 level could be potentially profitable on this because you're paying so little of a debit to get that upside exposure on this. So remember that what you want to happen is it to grind up towards that 540 strike. But even if it goes above there, you just don't want it to go maybe above 600. That's where you start to lose on the upside, or you don't want it to fall, maybe below 490. Here, that's when you start losing, and it's the debit that you pay is your risk. Now, you've got some assignment risk on that short option over the next 3 days also into expiration, but taking advantage of the vol dispersion that we talk about to have a low-priced entry point for some upside exposure on this one for the call calendar to the upside here, and it lines with 1 standard deviation. The option market pricing in about a plus or minus $46 move in either direction on this, and that lines up with the 540 strike to the upside here, Diane. So kind of setting up with the data that Folio gave us.
All right, that makes sense. Thanks, guys. So we've got the breakdown coming up. Investors are marveling at Marvell today. That stock soaring more than 25%.
I'm not.
For a record close. We'll have more fast market.
It was. Yeah, Marvell. Marvelous. Actually, opening looked pretty good. Snake breakout, double bottom, boom. Come on, we're waiting.
The Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
It's not true.
Hi, I'm Alex.
I'm Jane.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. I'm Diane
Jim's
King.
always been there when you needed him.
Before we get to the breakdown, let me give you a check of where markets stand. On Wall Street,
Yeah, where do they stand, honey?
The S&P 500 right now better by a touch more than 1/10% on records one.
I'll be right back.
In a continuation of the winning streak we've seen for the Bulls. The Dow right now better by 1/4%.
Yeah, what do you think about
NASDAQ
that?
100, touch more than 1/4%. Russell
It's
2000
impressive.
higher by more than 0.5% right now. Wall Street marveling at Marvell today after NVIDIA CEO Jensen Huang.
It's very
says
impressive.
This company will be the next trillion-dollar heavyweight. Here's the why. Huang says there's an increasing need for its networking and connectivity chips, which are critical to data centers and key to the AI build-out. Marvell up more than 28% right now off the back of those words, and now on pace for a record close. The stock is also higher now for the fourth consecutive trading day. That's time now for the breakdown. For that, let's welcome in George Sillis, senior markets correspondent, to take a look at Marvell. So those shares just soaring, and I mean just throughout today's session, and continuing to have momentum and the wind at its back. George, how do you want to break this one down?
Well, I mean, it just gets better, I think, if you just look at what's going on with Marvell. I mean, the stock has just been up tremendously, since around February this year. It started gapping to the upside. It did pull back a little bit when we had our war scare, but nonetheless, it's been a remarkable performer, to say the least. And these are big moves, and we're talking now 25, 30% moves in a day. And, we talked about Dell and some of the other movers in the server space. But interesting enough, I mean, if you think about the last couple of weeks or so, the switch has really happened in terms of some of the aspects of the technology stack, in terms of NVIDIA's discussions when they actually had earnings. If you think about the Vera Rubin platform, the Rubin platform essentially is inclusive of GPU technologies, but also networking, switching, and essentially edge cloud computing along with software. So I think that's creating a spillover effect to the network companies. Now, if you look at Marvell, Broadcom, for instance, which is really a larger scaled-up version of Marvell, that stock is also higher quite a bit in the past few days. And so, when the godfather of AI, Jensen Huang, speaks, everyone listens. And he's talking essentially how Marvell is a critical component of the AI infrastructure in terms of networking and edge cloud computing. And it really fits in with the Vera Rubin platform, which is going to be launching based on what we heard from NVIDIA's last quarter's results in the back half of this year, which is a major catalyst for that business, but is creating massive spillover effects for companies like Marvell, which is a semiconductor company that focuses on network infrastructure and optical networking. But at the same time, interesting enough too, Marvell is in the race for the ASICs chips, the application-specific integrated chips, which of course Broadcom is leading, and that's essentially a high-demand area of the marketplace, including partnerships with major hyperscalers, Meta Platforms, Microsoft, Amazon, with their TPU technologies. So you've got best of both worlds here with Marvell. You've got essentially silicon, and you also have networking and optics, and both of these are huge catalysts for the name, and that's why it's been a remarkable performer, to say the least, especially lately, but also since, of course, we saw the lows in the market in late March.
George, great points there. Now, NVIDIA obviously has a vested interest in Marvell doing well, given their investment in the company. So how much does it matter, I mean, because look, the stock is off to the races off the comments from the CEO, which obviously there is some, validity to some degree, but, it's NVIDIA and they invested in this company. Your thought?
Well, I mean, I think it's really important. The reason is because, NVIDIA is the lead architect of all of this with GPU accelerators. But if you just look at what NVIDIA is doing, this can also explain why the stock has been relatively range-bound, for lack of a better word, since almost July of last year. I know it broke out to a new high earlier this year and it pulled back. But I think what's happening here is that the company is now evolving, NVIDIA now, from just a GPU company into basically a complete vertical stack of technologies, CPUs, ASICs chips, networking, Ethernet, software, security. And that entire vertical stack is going to create spillover demand for the companies that provide optical switches and interconnects like Marvell. So I think the partnerships they have with NVIDIA, obviously the validation that Jensen Huang supplied the company is very profound. And, the $1 trillion market cap, one would say perhaps that's a little bit high considering, the company's market capitalization is somewhere around the $200 billion range. This was, again, based on yesterday before the move today. But it certainly could happen. I'm not saying it's not going to happen. But again, I think the partnerships and the relationships and the technology mobility that NVIDIA is demonstrating with their next generation Vera Rubin platform is huge for networking company. And this includes, again, not just hardware and optics companies like Marvell, but even some of the edge cloud computing companies like Cloudflare, SymbolNet. You'll notice that stock is higher. Akamai. I'm just naming a couple other, periphery names in the cloud space.
George, you're not making no sense.
Senior markets correspondent with the breakdown on Marvell. Let's get Tom and Kevin back in here for example trade purposes. Tom, this time you've got the example trade in Marvell. Take it away.
Yeah, you take a look at I think the market cap's about $246 billion.
Does that tell you anything?
Now, so what, another triple to get to the $1 trillion mark that Jensen Huang threw out there. But, George makes a good point, and you make a good point.
George.
The fact that NVIDIA has a vested interest in Marvell doing well, right? So maybe that has to come into play because the stock is now at $284 above.
There's a problem
all
here.
Those price target hikes that we had post-earnings last week, it's above every single one of those that came out the day after earnings. And they just barely beat on EPS. They barely beat on revenue came in line. Yeah, they did well across their AI data center business and the optics, the Ethernet scale-out switches. Those were starting to improve also. But is it already in the stock? That's what you have to wonder because valuation's getting pretty high. The trailing PE now up to 98. This was just after basically an in-line type of quarterly report. So, Kev, I looked at a strategy that takes advantage of maybe the stock goes a little bit higher, maybe it pulls back, maybe it consolidates.
Oh, I missed my shot.
At this point, because the RSI is sitting at the 85.
I can get out right now.
So anything above 70 over.
If I like, with $90 worth of profit.
Go any higher, but yeah, we're sitting here at record highs right now. So, Kevin, I looked
right
at an
now.
unbalanced call butterfly where I can take a credit in. And the stock
He's
has
copying
continued
me.
to move higher, so the price is probably different than what we've got up there now. But in the June 5th weekly cycle, I'm going to buy one of the 285 strike calls, sell two of the 290 strike calls, and then buy one of the 320 strike calls. You're collecting a credit on this, and the credit we've got up there is about $4.75. It's trading probably closer to about $6.30 because the stock has moved higher to record highs. But that credit that you collect.
Well, I'm in the cause. SPX 76.20 at $2.80. Well, you're up $40 a contract. Have you ever thought about selling? Not right yet. I know I'm here at resistance, but I really don't give a heck. 330. Up $50 a contract. You ever thought about selling? I'm not swelling. Should have sold these contracts at $50 a piece. Or should I just let them rest? Break an all-time high. Well, you're up to $60 a contract. Have you ever thought about selling? Yeah, I did. Then I looked over there at the vegetable aisle and I seen Elizabeth. I said, darling, would you like to come home with me and watch SXPX break to liberty? Hell, Jim, you're up $60 a contract. Ever thought about selling? Yeah, I did. I'm seeing a triple top right here. That ain't no joke. Jim, you're up $70 a contract. Have you ever thought about selling? Oh shit, now you're up 80. Okay, I'm up $100 a contract. Have you ever thought about selling? Yes! If you're in this trade, take profit. Make a business decision. Jim, you're up $100 a contract. Have you ever thought about selling? Yes. There it is, right there. Well, I hit my target and I sold the lot. Can't wait to smoke a little pot. Oh, gee, oh my. Can't wait till the bell rings so I can get high. I just made $300. That's all. Pretty good little pinch right there. Caught the bottom of this here bull flag and we broke out. Look at that. Do you care? I care. Woo! Jim Sell. He took that trade at $2.80 and sold it at $3.80. Unbelievable. The crowd is going wild here at the sports arena. I'm very impressed. Sit here and drink a cup of apple cider and make $300. Now what's it wanting to do? Does anybody know what it wants to do right now? It's asking for my permission to break resistance. And I said, no, wait a minute. I said, wait. Give me a chance. Kind of relax, take the next trade. Don't break out right now. Give me a few minutes. You're not listening. Let me get it on a knife. Come on. You're not listening. So I got out of these at 380. And all I wanted to do was get into a pullback. At least $1. Okay. Might not get that chance, Jimmy. It's called rinse and repeat. Rinse. Rinse. It's not like taking a bath. Rinse. Rinse. Rinse and repeat. Let's have one big fat red candle. Then a couple little ones right behind it. Get it right, Jimmy. She kind of wanted this not to keep going up and just have one little fake out and shake a few people out and then me jump in. Fat cats are at having their steak and they're missing out. They're starting to come back to the building right now. It's almost 1 o'clock. They're leaving the restaurants tipping. See, this is all poised to break out, but I want it to have one little fake out, and then, but it ain't gonna do it. It's not gonna do it. 340 I could have got. Maybe 330. Well, the 76s are pushing their limit. I've got my eyes open for a fake out knife. It's a rising wedge. Fall on down and hit the 21 EMA. Let's go. Giddy up. grab some more. Okay, here it is. This was what I was looking for. Now if I grab it here, the only thing I got going for me is that 21. And that's what I wanted right here at $2.95. Right about now. Okay. Crowd's going wild. He's got the 76.20s at $2.95. It's a little risky, Jimmy. Come on. 3 Black Crows. Oh, could get down to the 61. 3. Wow, the hell. Did you see that? I was like 320 for a second. That just shot up. That shot up like $2. Boom, it went. Now I'm green. But for a second I was like $90 down. 105. Being 75 up. Didn't matter for a second. That's a $200 spread. In like second. The Bears are definitely in control. Jimmy was a sneaky snake fighter. He always bought it at support and sold at resistance. He's in the 76-20 calls. He needs to sell them at a little bit of profit. Baby, let's go. I mean, there for a second I was down like 105, and then bam, I was up 75. Well, Jim, you're down $45 right now. I know you wrote this song for the movie somehow. Well, let's break it out of the snake. Pull back. Google's down $8 and something. Well, they were pumping this one yesterday. We called PLTR down at the bottom. And I'm waiting, I'm down, waiting for my baby to break out here. Let's find out who today's winners are. Today's winner is Marvell, up 30%. Tops. Tops has announced that it has elected not to proceed with a previous announcement of an equity offering. We're at $3.10. Jim, you're up. Are you going to hold on? Yes, I am. I'm getting ready to squeeze. Just make some profit. It's either sell here and get rewarded $15. Sometimes that's best if you haven't been run through the test. Some would call the ringer. Oh, there we go. As Jim puts his finger on the mouse, he has enough to go out and buy 2 Big Mac meals. Maybe 3. $75. He's got to pay taxes. So I get 2 good ones and a shake. Maybe a dessert. Just like this, back down to $3. That could have been my last chance. Well, pits. Put this thing up and get serious. Back down to support. We're at the 200 right here. EMA. Pretty heavy hitters. What time is it? 12:17. There's the 200 right there. Want it to hold right here. Get a tweezer bottom. Okay. Three black crows. Right now it's trying to tell you something. Wow. Nothing really holding it up now. The SPY's at the 200. Definitely that looks good. That looks good there. Looks real good. Go back up home. Come to Papa. Next day, the 3rd for the SPY. You learn how to swing them.
Has been volatile and actually now is lower on this year and lower over the last 52 weeks.
Yeah, certainly some big swings that we've seen here. We are up about a little under 17% off of this low point that we hit near 5/20/26. So that was a pretty big downside excursion there. Prior to that, 583 was a notable low point here. That was around where we saw resistance after we had this sharp price activity kind of swinging to the upside and the downside. We did manage to recover. We fought our way back up to around here near 680. This marks another notable high point that we saw after an earnings gap downward, as well as some notable lows back here as well. So further down the line here, more close to our recent activity, we had some extreme lows here near 653. In the shorter term, we've had a pretty small, pretty tight range for the most part here. We did have this upside excursion once more, but between about 600 to 620 or so is where mostly the price activity has been contained within these boundaries after earnings. So if we do start to think about our moving averages once more, it's more of a bearish picture in this case. Prices below all four of our moving averages, they're all starting to diverge farther apart from each other with a downside slope to all of them. So that's a sign more of the trend starting to degrade and pick up more toward the downside, even though we haven't really made any new extreme low points here. If we do start to break below that 600 level with any conviction, you could start to see that relationship get more exacerbated here. RSI, a bit of a bearish tilt as well, a symmetrical triangular type of shape here, but we are starting to drift below that green upward sloping trend line here, and we are below the 50 midline. So keep an eye on that, kind of the reverse mirror image of what I said with our last chart. Look for price to make new lows and for RSI to also make corresponding lows together and eventually potentially breach that 30 area that would demarcate the oversold area. So now in this case, volume profile shows that we have a node right about where we are now, 600 to 615. So this is kind of the same thing I was, again, saying with our last chart. We have a heavy volume area here at this supportive zone corresponding with our range that could result in faster moving prices once we do start to get below that 600 level. You may start to be on the lookout to see if this gap here gets filled near about a 570 or so. To the upside, 635 to 675 is the next major area of heavy trading activity. The point of control, our red line, the heaviest trading area of all, comes in at 665, which also would line up pretty closely with that gap that was formed after earnings.
Yeah, and this name again today, at least holding on to a % gain, so faring better than about half of our Mag 7 stocks as it stands right now. But so appreciate it, Rick Ducat, for all of the run through on Meta as well as Trip today. Now, last but not least, as we think through trading Meta platforms here again for example purposes, we did see a $735 price target by this firm today, so that would imply some further bullish activity.
Yeah, fighting the momentum a little bit with this name, though it's been underperforming pretty clearly a lot of its peers in tech. So it's a neutral to bullish strategy, waiting for a little bit more confirmation maybe that Meta's finally going to turn around. But it's at a pretty important area around that 600 mark, and so using that as a potential support level. This just goes out to the end of this week, Jenny, so short dated 595, 592.5 short put vertical, collecting a credit, risk defined, and actually a way to make this relatively, when you think of that one stock share for this company costs $600, we're looking at a strategy that risks 180 with a chance to make 70. So I know there's clear differences and sort of that risk reward. You know, if it went down to 594.30, that would be break even on this. It would only be down, you know, a $10, $20 on a stock share. So it moves around a little bit more, but neutral to bullish, and also about a 3-to-1 risk reward. So a chance to be probabilistic, control the risk, and also neutral to bullish in Meta.
And also relatively shorter term than some of the longer dated, of course, example trades that we do look at on the show. But we'll leave it there for Chartmaster today. Now, coming up next, we'll dive deeper into what this potential Anthropic IPO could mean for valuations, volatility, and of course, whether this AI rally is starting to look a bit overheated. We'll discuss this more coming up next.
news, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
More drama.
Well,
more drama.
Now, Anthropic's highly anticipated IPO could be a defining moment for the broader AI trade, with, of course, the company reportedly eyeing a valuation pushing $1 trillion. So for some more details today, we're now joined by Ben Emons, the Chief Investment Officer and founder of FedWatch Advisors. Ben, first and foremost, thank you so much for joining the program today. We are approaching what's anticipated to be a very busy IPO season. With all of the excitement around Anthropic's IPO, what does this signal about expectations for
Spy right here.
growth?
Yeah, thank you very much for having me. It certainly signals that not a peak, I think, because that would be probably a bit of a too exaggerated viewpoint, really, because if you think of the AI growth, it's not just only Anthropic.
Oh, this guy.
AI, but there's a whole stack of other companies that are now also coming out as serious players. Take, for example, Marvell Technology today.
Marvell.
Popping higher. I think this is another example of another sort of road in the AI space. Or yesterday you had Micron, or last week. So you can go on. So I think it's not the peak, the Anthropic IPO, but it's sort of like a very hype moment, because it's not only the largest IPO we've seen to date in history, but it's about cloud. It's about this large language model that may be applied in or set the benchmark for large language models.
We're at the bottom of that channel.
For everything, just like you had Microsoft in the 1990s setting the benchmark for software. So I think that's the way to look at it. The day itself, we'll see. Will probably be volatile, who knows, but I think it's not the peak. I think it's more like a euphoria moment of AI being really part of the economy and large investments going into AI.
Ben, if we look at this from sort of a macro picture, and you start thinking about, I mean, Alphabet just raised, what, $80 billion through an equity placement as well. You have all these IPOs hitting in relatively the same amount of time. Is there enough money to absorb that kind of demand, or are we going to have to see rotation out of other places to find, I guess, the money for these?
I think the latter. I think the rotation trade is where you really want to pay attention to, because you could say, like, look, maybe it's just this Max 7 rotation, right, a bit away from the Max 7 into a name like Anthropic, or Anthropic gets included into the Max 7, and that sort of trading against, you know, what you're saying, the amount of supply of equity, how it can be absorbed. Oh, there's plenty of capital out there, right? There's $8 trillion in money market funds. There's tons of other liquidity on the sidelines. I think it's not that much of an issue, but it's, I think, more the relative value that we're looking at. So, you know, right now, Anthropic is, for example, priced at 25 times sales. that's coming on the higher end for a lot of these companies. So I think that's what people will pay attention to. Will it be like Cerebras, where you get now 25 times the sales, but on the day of the IPO, it comes 100 or 200 times sales, I don't know, 100 or 200 times forward earnings. I think that's when people will play the relative value. Like the more expensive I think the Anthropic IPO comes out, the more the relative value presents itself for either switching away from Anthropic into something else or vice versa, something like that.
Okay, so do you see this IPO event potentially becoming this broader than reality check for the entire AI space, since investors might start using its valuation, say, as a benchmark, which then, as you say, post-IPO enthusiasm, that could change valuations pretty substantially?
I would agree, because it is a reality check, because we haven't seen something like this ever before. You know, the big bellwethers, Apple and Microsoft and all the other companies, when IPO, when it was far, far smaller. Ultimately, these companies became major companies and influenced the index significantly because of their weighting. But here we're coming in with a company that's right away at 6-7% weighting in the S&P index, and that's significant, I think. And it's so the reality check, I think, is about we've invested a lot of money into AI. We're seeing investments now taking off further. We're seeing more and more spending happening. And this company would have to prove that this can actually be a really profitable enterprise in terms of AI. A lot of people are excited about it, but we have to see if it's truly profitable. I think that's the moment that we're looking at with that IPO.
One, to take it one step
I was looking
further
at
than
these
that,
spies
is there
at
enough of a moat
145.
around this type of technology?
The 760s
I think about
for tomorrow,
OpenAI's
but-
role as sort of bringing this to the mass market.
The 760s for tomorrow were at 145 just a bit ago. I was just watching them. For tomorrow, 3rd. We're back down there, 149. President Trump posts on Truth Social fake news reports that the Islamic Republic of Iran and the U.S. stopped talking. I'm thinking about it. We got snake, breakout, higher low. This could be a wedge. He's going to do it. Jimmy says he's doing it. 76.20s. We're right there at 110. Shit. I waited and waited and waited. We're still at support on SPY. Oh. Come on, you dog.
Welcome back to Next Gen Investing. Now, Alphabet is making one of its boldest bets yet in the AI race, reportedly exploring plans to raise as much as $80 billion to fund its next wave of infrastructure build. So for more details on all of the news shaping Alphabet shares today, we're now joined by Sam Vadas, host of Morning Trade Live and Market on Close. So Sam, walk us through the details and, of course, what really Alphabet's been up to as of late, because they've been busy as far as capital spend behind AI.
Absolutely. They need a lot of it. They're doing a lot of things right now, Jenny. There's so many angles to this story right now, so many conversations around what we've learned here with this plan to really tap the equity market here with regards to the $80 billion raise for its AI spending plans. I mean, there's a big question as to why it needs to do that. We obviously talk about a lot of companies tapping the debt market usually to fund their spending plans here, and then also, of course, you have this investment from Berkshire, which is part of it as well. And then also you've just got a lot of the conversation around the timing with, of course, all the attention being on the Anthropics and the SpaceX IPOs and also OpenAI as well. So as I mentioned, there's a lot of threads that merit pulling on today, but basically, as we mentioned, this would involve the company selling shares directly to the open market, underwritten offerings as well of shares and mandatory convertible preferred stock, and the $10 billion investment deal with Berkshire Hathaway. This would be one of the biggest equity deals ever, and as I mentioned, it's interesting because we often talk about companies tapping the debt market. Now, Google Alphabet has been doing that. It has been issuing debt in multiple tranches and in multiple currencies, I believe yen and Swiss francs, so it has been diversifying outside of the US. But the conversation today is why they need to tap the public markets, particularly when they're sitting on a huge amount of cash on the balance sheet. I think it's anywhere between 130, 150 billion odd dollars here, and they didn't mention this in their last earnings report as well. I know a lot of people have been pointing to that, but we know that they're going to spend a lot of money this year. It was 180 to 190 billion dollars.
Right now I'm up $50. Should I sell? Oh, it's real solid. Oh, back to even. Staying with it. If I can gain respect here above the 21, that's the white line. It's come real close to hitting my alert over here. Go. So I can get out now and be up 50. No.
In, this is roughly how much I'm spending, how much do I have to set aside, or is it more complex than that?
I think the really interesting thing here is that you actually see both. And in general, there's somewhat of a bifurcation of use cases where you've got the everyday person who wants to ask, exactly as you pointed out, everything from can I afford this purchase, to how can I optimize my mortgage, to how should my spending patterns sort of change, behave. And this has been a broad trend of financial management sort of like applications that everyday consumers are looking for. And they are quickly asking those questions and turning to both dedicated AI tools and AI tools that are embedded in their financial applications to ask that. But also interestingly is on the other end of the spectrum, we also see sort of a power user that's starting to use the power of AI to really manage their finances, trading and things like that, optimizing between accounts. So really we see AI used on both ends of the spectrum.
There we go.
And, open finance data is leveraged across both.
Okay, and so the next step of course, that agentic AI will be able to act on any individual's behalf, which I know sounds frightening. For me, it actually sounds like kind of an amazing concept, but how close do you see us really to a world where people are comfortable now letting AI make these decisions automatically?
Good question.
So, we actually did a pretty wide survey of American consumers, and 50% of them said making financial choices without the use of AI will feel outdated very quickly, right? So we already see that the tide is turning in terms of just simply an expectation of AI use. But your question was, okay, what if I want AI to actually sort of like take action?
7620s are now at 120.
Where 44% of consumers say that they're comfortable with that. But when you look at Gen Z and millennials, it's 54%.
Sorry, sir, but you got to talk about stocks right now, or you get interrupted. 7620. We're above the pivot point. Now, I don't know if I can put too much merit behind that red line, but I know I can on the other two. Don't hurt him, Alex.
How decentralized are these conversations, or we just have a world where all the bots are doing the exact same thing for every single person?
Low blow.
I think that's a good question. I think in general, what we're going to see is that the AI will adapt to sort of what the objective of that person is. And I'll take my own lived experience. I use AI very actively in my own finances, right? And like, if you give it sort of like the approach that you want to take of like, hey, I want to follow the like general.
I'm going to make a business decision.
Approach, or if you want to go whole hog.
My AI button.
Indexing or
7620 is coming up to the 63. At $1.20. So that's this right here. This guy had to go. He had to go. We're back to 120. Come on, let's have a little breakout. 60, 80 bucks, Can you do it? That's a wall. Iran says we'll open up Hormuz. No. This ain't right. By the time we hit the 63. Very interesting. Well, we still might have a chance. I'm at 125 right now. I can sell them here. Break it. Pretty hard wall to break. What do you mean by wall? These things. Oh. Oh. George, help me.
Here essentially is an agriculture and forestry as well as construction equipment company, but some of the companies like CNH, which is actually sort of an equivalent, if you will, like an AGCO or a John Deere in the UK, the agriculture-based machinery businesses have actually performed quite poorly, to say the least, in the past 6 months or so. I think it has to do a lot with what's going on with tariffs, but also what's going on with fertilizer and some of the constraints in energy prices, which are trickling down to the agricultural segment or industry group in terms of their purchasing power for this equipment. So CNH, like I said, is one of these companies. It's a UK-based business that is in agriculture as well as construction equipment. So they supply the market with things like tractors and harvesting equipment and ag, but also in the excavators as well as skid steers and loaders in the construction space. So the Trump administration is actually, I think, trying to provide some relief to the farm industry, because if you look at the news, they are looking at lowering tariffs now from around 25% for imported equipment. That's certainly CNH exports to the United States down to 15%. And across the board, if you look at the companies like John Deere, CNH are actually trading to the upside. So I think the Trump administration is really trying to provide some relief here, because we know that with the Middle East conflict this year, tariffs last year, both of those have been extremely difficult for farmers to deal with. And I think this is providing some promising relief and much needed relief to the farm industry.
Well said, George.
Maybe it's obvious, maybe I'm missing it. I see why it's a tailwind for CNH, foreign-based company. Why is this beneficial for the Deeres and the AGCOs that are here? Doesn't this just open the door up for more competition?
Well, it does, and it all depends, because again, you have to consider Deere and AGCO. Kubota also is a smaller player. All these companies also are exporters, so there's a balance between what they're selling and producing domestically versus what they're selling abroad. So any tariffs, even if they're unilateral,
I don't like that, George.
tariff relief will provide positive spillover effects to these other businesses' export markets. I think it's overall providing relief to John Deere, even though CNH is getting some import relief to the United States, because it's providing additional income availability to John Deere as a spillover effect from, let's say, CNH. So less cost of the imports essentially will then cause Deere to not necessarily have to match higher prices because of tariffs, and therefore it'll provide more affordability to the farmers who may have actually delayed some of their purchases, and maybe even some of the maintenance, if you think about it, because John Deere doesn't just sell equipment to domestic farmers. They sell, technology and services, including maintenance, repair, and operation. So again, I think it's providing a good relief, because it also could create a situation where, let's say, the UK or even let's say Brazil reduces tariffs on agriculture equipment the U.S. exports to them. So any reduction in tariff is good for the industry, and I think that's why we're seeing a spillover, positive spillover.
I don't know if I like that, George.
Areas, including Caterpillar, by the way, because they do focus more on construction. They're getting a huge boom from the data center build out. John Deere had as well, but I think the overwhelming aspects of Deere's business has been the agricultural markets, which have actually been relatively weak because of tariffs and, of course, higher energy and fertilizer prices.
Yeah, good place to leave it. So appreciate it, George Chillis, for all of that breakdown. That'll also do it for Alex and myself for Next Gen Investing for this Tuesday. We have the watch list coming up next.
Ooh, the watch list.
Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, it would become.
A long
I don't
time
even know
ago.
if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange. We're so glad you're with us. A record-setting day on Wall Street for the S&P and the Dow Jones Industrial Average. Here's what's on today's show in our tech spotlight. We'll take a closer look at the top cybersecurity names ahead of Palo Alto Network.
reporting its earnings this afternoon. Michael Saylor's strategy, well, he sold Bitcoin yesterday for the first time in 4 years. Is that a cause for concern? Well, we'll examine all of this in the crypto report. Our panel is on standby to dive into the latest retail earnings and what that data means for the consumer going forward. So lots to discuss in this hour ahead. Let's take a quick look at the markets. 9 weeks of gains, 9 days of gains, and records for the S&P and also the Dow. We do have up arrows. The S&P is up 5 points at 76.05. The Nasdaq's up 63 points at 30,576. The Dow Jones Industrial Average up 137 points at 51,217. And the Russell gaining more than 0.5%. As we take a look at the heat map here, you can see a mixed bag. A lot of the Mag 7 names may be lower, but a lot of the tech names have had some bright spots. We saw some rotation back into tech and software. Names like Hewlett-Packard Enterprise and also Marvell had up arrows today. NVIDIA since looks a little more flat there, but even NVIDIA had a gain earlier today. But HP was up 24%. Marvell's been up over 20%. So you've seen some great moves there in the big picture in tech. You're also seeing Caterpillar, which one of our guests had a stock pick today. We did see that. So that name right now is higher. We also have some of the others in the green, including Apple. And as we take a look at the futures, oil is up $1.42 at 93.58 the barrel. Gold at 45.17, up $11 a troy ounce. 10-year bond yield 4.47 and U.S. dollar at 99.24. Now Bitcoin is near 2-month lows. We will have a crypto report for you in our show. We're down about 60. We're at 67,585. That's about 6% drop. Okay, closer look at the big picture. And these are your market moves. Joining me right now, Diane King Hall. We've talked about some of the winners and losers on Wall Street. And of course, Hewlett-Packard Enterprise, HPE, is one of the big winners today. Let's talk about that move and what's behind it.
Yeah, it's still soaring today. It is off the highs of the session, but we're still up more than 15% off the back of a blockbuster earnings report. It crushed expectations on both the top and bottom line. Revenue surging some 40% on a year-over-year basis, so you had real strength there. This is the story about AI and the AI arms race and the build out there, which HPE, Hewlett-Packard Enterprise, is very much benefiting from. By the numbers, adjusted earnings per share, catching people up who aren't caught up, 79 cents. The street was just looking for 53 cents, so that's a beat there. Again, revenue, 10.68 billion. That's better than expected, a 40% increase in revenue on a year-over-year basis. This is a demand story for AI infrastructure and data center equipment here. Cloud and AI revenue reached 7.7 billion, a touch more than that, well above expectations. Customers are investing in data centers, networking, AI infrastructure here. Management says demand is strong as companies scale AI here. Server revenue is the standout performer here. That segment generated some 5.45 billion. That's better than the expectations the street was looking for, a touch more than 4.6 billion. So it suggests that AI server demand is still stronger than many investors anticipated. In terms of their guidance, they raised full-year EPS guidance to 335 to 345. That is up from their prior guidance of between 230 and 250. So that's a big increase there. Management say the company is now tracking roughly 2 years ahead of their long-term financial plan there. So there is some blue sky here opportunity that you see. You see investors responding to that. Although, again, to be fair, we are off the highs of the session, Nicole. It did have a strong gain, though, yesterday going into its results.
Yeah, pretty amazing. I mean, they talked about the demand that's very resilient. That's what the CFO said. Stocks up 15%, have been up 24% or so when we talked earlier this morning. What about Marvell, another big mover here in the green?
Now, that one remains on a strong upswing throughout today's session. It is up more than 20% as we speak, 28%, almost 29%. Near the highs of the session for this one. So investors just continue to Marvell today off the back of comments from NVIDIA CEO Jensen Huang, who was speaking about Marvell, calling it the, quote, next trillion-dollar company. He made the comments during his joint appearance at Computex in Taiwan with the face of this AI revolution there, essentially endorsing the next leg higher for Marvell. We know these shares have been on a huge upswing so far this year, so it's just adding more momentum to it. It's essentially the NVIDIA stamp of approval here. Now, to be fair, NVIDIA does have a dog in the fight here. They have made an investment in Marvell. Now, Jensen Huang arguing that AI computing increasingly relies on massive clusters of chips working together. They think, obviously, that Marvell is a big piece of that puzzle. NVIDIA may power the AI engines here, but Marvell helps connect the entire AI system. So they think that this is one of those stories when we talk about the trillion-dollar market cap companies that Marvell is going to be one of those names that we talk about there. And you see Wall Street responding very, very positively to this one, holding on to that strong advance throughout today's session, unlike HPE, which again still has a big advance, and you know, you have analysts updating their price target, but Marvell has held on to it throughout today's session, and momentum has been in favor of the bulls.
Yeah, incredible. I mean, it's been moving higher since this morning, so really showing some momentum there indeed. And last but not least, we talk about software being such a big winner, and any thought on the group here as a whole?
So the group taking a step back today, it appears like there is some profit taking off of that big swing higher yesterday, but you know, you have to take this into context. We've seen this move off of those lows that we saw earlier this year. IGV is down today, but we've seen a powerful move over the past month that by yesterday's close had brought it positive for the year. It's taken a little bit of a step back today, but again, as investors, it looks like there's some profit taking. You got Microsoft under pressure today. You got Salesforce taking a step back. It's off by more than 5%, but keep in mind, we saw that big swing higher yesterday for Salesforce. That was up double digits. You also have Oracle shedding a bit today, but again, you know, again, we're seeing all of that red in the software names after a big move to the upside today. Some of those names in the cybersecurity space taking a little bit of a step back today as well, but cybersecurity in terms of the recovery in the software sector has been a big comeback story. I know you mentioned Palo Alto, Nicole. That one is obviously on our radar ahead of its quarterly results. Now, there are some who say that the bar may be high for Palo Alto to jump over, unlike, for instance, CrowdStrike, because you want to see more about that CyberArk acquisition and how that feeds into its numbers from here.
All right, Diane King Hall, great to see you.
All right, great to be with you.
Thank you so much. All right, coming up, we will spotlight tech and cybersecurity ahead of Palo Alto Networks earnings. Software stocks are under pressure today. And still to come, big moves. Tom White will join us with real options trades for Amazon, Alphabet, and Intel. So much more when the watch list returns. Keep it right here on Schwab Network. We'll be right back.
Boy.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
This place is incredible. It's where I get all your office supplies.
Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now. Schwab.
Invest your way with Schwab.
We are back right here on the watch list, watching Palo Alto Networks. Will be on the marquee with this afternoon. The cybersecurity firm reports earnings after the close. Analysts are expecting earnings of 81 cents a share on revenue of nearly $3 billion. Shares hit a new all-time high yesterday and are up more than 60% in 2026. Taking a look at some of the other names in the group here, you see a lot of down arrows. You do see Zscaler, the worst of the bunch. That got hit pretty hard last week. It's right now down 7%. I do remember Dan Ives, when I spoke to him last week, thought the sell-off was a buying opportunity. He also says he has a CrowdStrike, Palo Alto. These are names that
We're breaking 63 on the SPY. Uh-oh.
You have down arrows. All right, let's go deeper into our tech spotlight. Joining me right now, Phil Palumbo, founder, CEO, Chief Investment Officer of Palumbo Wealth Management. Thank you so much for being with us. So this afternoon, we'll be hearing from Palo Alto Networks. You saw many of the names. We do have some down arrows today. Your thoughts?
The key thing about Palo Alto and CrowdStrike, it's very simple. As we get more and more embedded with AI into our economy, these companies will continue to be beneficiaries, not victims of AI, which is originally the thought process, which is why we saw their stocks decline back a couple months ago, and now they actually ramped up big time. So that's the real story behind these companies, and really all investors really need to understand. So it's more view on what's your view on AI as you think about things going forward, and it's only going to accelerate, which is going to help both the top line and the bottom line for both of these companies.
So when you look at where they are now at the current valuations, you said they are the beneficiaries of what's happening with AI. When you look at the valuations, your thoughts?
Valuations only become a problem, whether it's the broader market or whether it's companies, when it's a fundamental breakdown. There is not a fundamental breakdown of these companies. In fact, the exact opposite is happening, where everything is looking to accelerate. So fundamentals are still there. Listen, nobody loves to play high valuations in anything, you know, but if you believe in the fundamentals and you understand the fundamentals and that continues, the stock will continue to follow that. I think they can grow into their earnings with margins of 76 and 78%.
And when you look at technology, are you feeling more optimistic, or what potential risks are you watching?
Yeah, so I'm a big believer that we're in the early stages with this AI revolution that we're seeing. I think valuations as it relates to the Mag 7 and some of the big ones like NVIDIA and Microsoft and Google and Amazon, which were big owners of those businesses. And we think that, you know, going forward, if you compare it to 1999, they're way below the forward multiples of 1999. And these companies fundamentally are continuing to grow and they continue to be strong. And again, going back to what I said before, if we're in the early innings of the AI revolution, these companies will continue to perform well.
Interesting. And you're looking back to 1999. I mean, are you making any similarities or comparisons, or really showing? You said they're much lower in forward-looking PE. In other words, they have better value than some of those did in 1999, right? I mean, is that what you're saying? And also, are there risks to tech at all then?
Well, there's always risks, right? When you're an investor, there's always risks that you're faced with. But again, you just have to make sure you understand the fundamentals as an investor, which I think a lot of people don't pay attention to that. You have to go back to history to understand markets. History doesn't repeat itself, but it does rhyme. And in 1999, there was this tremendous euphoria and pricing of many companies that were zombie companies that had no debt, and it's had something internet related to it. And that's why those companies were moving higher. Where today, I do believe it's a different story. These companies are so fundamentally sound in many aspects, whether it's growth, top line and bottom line, and free cash flows, which I know a lot of the cash flow now is free cash flow is going to build outs, which is necessary because there's tremendous demand there coming from the consumer. And by the way, listen, nothing's ever perfect. Nothing goes straight up and straight up and to the right. We wish it would. And of course, you're going to get backups, back and filling. You're going to get bear markets, and that's all part of the game. You know, that's what happened back in 1995 to 1999, where you had 15 corrections, but the Nasdaq went up 3x during that period of time. So this is all part of being an investor in the markets, but there's still strength in these tech companies for sure.
You did say, look, maybe the volatility during the peak war escalation may be behind us, but you do think that a pullback, expect a drawdown of about 10 to 15% in the S&P 500 before the market finishes higher on the year. So somewhere between now and the end of the year, you're saying we'll see a correction or worse, right? And that might be a buying opportunity. Is that right?
That's absolutely right. So the idea behind more volatility or volatility increasing from here, first of all, we are overbought on the upside here, right? So we're definitely stretched in the very, very short term, looking at many short-term indicators. Number one. Number two, Kevin Moore's, which I've been talking consistently about, I think he's going to be phenomenal, but I do think he is someone who's going to disrupt. And I think the bond market specifically needs to get used to him and what he's looking to do as he looks at the different way he looks at inflation and the gauges he's going to use, and he's talking about it consistently right now, and then shrinking the balance sheet, right? All of that stuff is disruptive and different. And for that, that's going to create volatility in markets.
Let's talk about some of the names that you think are good investment ideas or potential investment ideas. Microsoft, let's start with that. Where do you see it headed?
So Microsoft fell in the same camp as other software companies, where investors thought that AI was going to disrupt software companies. That's why we saw these companies get hit really hard, and Microsoft was included in that. What people have to understand about Microsoft, they're always late to the game with new rollouts because of security reasons. That's number one. Number two, 95% of Fortune 500 companies are using Microsoft services, which means that the data is all in Microsoft, which is the graphing, etc. Microsoft wants to be the AI operating system for these agents. They want the agents to sit on top of all their data. So Copilot will become a success. Right now they are using Claude within Copilot and OpenAI as well. So Microsoft, I do believe, and you're going to see it in the numbers and you saw it last quarter, that Copilot will continue to be used more and more. Profit margins are tremendous on that business, and I just think that they're going to shine as it relates to.
So you said it's becoming the backbone of enterprise AI in your notes. You also have Uber and Joby on your winning names that are investment ideas. Tell me a little bit about each one of those.
Yeah, so much like when I talked about it on the show with Google, everybody thought with ChatGPT back in November 2022, the search was over. Meanwhile, Google crushed it, and their stock price is up tremendously since we last met on the back of why I thought Google was going to be one of the biggest beneficiaries of AI. And here we are with Uber now, where the concern is around autonomous vehicles, which I completely understand. However, Uber has the network. 200 million people visit them every month in terms of their software. So they have the network. They're making the right investments in AV. Their CEOs, I think one of the best CEOs around. They have an incredible brand and product. So I believe they'll be the beneficiaries of autonomous driving because of their network and the partnerships they're doing right now with NVIDIA and many other car manufacturers for the fleet. So and Uber's trading right now at a cheap valuation. So I do think there's some really nice upside overall, and it's a free cash flow margins that are actually growing, not declining. So it's a great story longer term, but you have to be patient.
Yeah, and you also had Joby Aviation. Thank you. Good luck there at those names, Microsoft, Uber, and Joby. Phil Palumbo, great to see you. Thank you so much.
Great to see you.
Founder, CEO, Chief Investment Officer, Palumbo Wealth Management. Coming up, a closer look at the crypto space. So Michael Saylor's strategy made its first Bitcoin sale since 2022. And that happened earlier in the week. Is there cause for concern? Let's take a look. Watch us, we'll be right back.
Kick off data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
My man. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily. identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
This is Fast Market, built for traders who want more than just headlines.
Oh boy. Look like we're flagging here. We'll find out. Not really nothing going on.
I think so. It's a good point you raise. So we are down 40% from the October highs that we saw. There's definite concerns that geopolitical tension, whether it's some of the flare-ups we've seen in Iran or some of the potential energy inflation, might cause the Fed to be raising or hiking rates over the next 6 to 9 months. So I think these are some of the concerns the market has. We've also seen recently heightened concerns around the threat of quantum computing and whether this hurts the security of Bitcoin. But I think ultimately at these prices, look, Bitcoin held up reasonably well around the $60,000 mark. We're close to where we were on the 52-week lows. So I think we're starting to see some institutions come in and look to buy at these levels, thinking that they might get a rebound from here.
Oh, you think so?
Understood. So how could MicroStrategy further benefit from institutional adoption?
She understands.
Look, I think MicroStrategy. So they have the key concern that they have to address here is the liquidity to pay the preferred dividends over the next 12 months. Now, Saylor is sitting on around $900 million cash reserve, so he's got more than enough room for about 6 months. But at the present level, so around 1.2 MNAV, he's able to sell shares to raise the cash to pay those dividends. But look, if Bitcoin rebounds from here, then he'll have the ability to continue selling shares, or he could take in more capital from issuance of these prefs and continue buying more. He's always maintained that his most important metric is Bitcoin per share. But I think, they have signaled that they're willing to be prudent and sell some Bitcoin where they need to kind of raise cash. But I think the market would definitely like to see them avoid selling any more Bitcoin for the near term, because there's concern that this might be creating an overhang that indeed some participants in the market could potentially front run and drive prices lower from here.
You did mention the infrastructure surrounding Bitcoin and saying that it's fundamentally stronger than in any other previous cycle. Could you explain that?
Oh, definitely. So, I think this cycle we now have ETFs, we have significant futures and derivatives markets around Bitcoin with the CME, the numerous ETFs, whether it's BlackRock's IBIT or some of the others. So there are now more and more means for institutions who want to get Bitcoin exposure to do so, whether it's through holding the ETF directly or through using synthetic derivatives to try and replicate that exposure. And I think this is why, notwithstanding we've seen a 40% drawdown, I mean, typically you have to remember, Nicole, that in past cycles you might have a 70 or 75% drawdown from top to bottom. So that volatility is getting a little bit less each cycle, and it means that there are also just more market participants who can scoop up the bottom when we do get towards 52-week lows.
Sid Powell, nice to see you. Thank you so much. CEO, co-founder, Maple Financial. Thank you, Sid. Coming up, well, we've gotten a good look at some of the consumer names. We've got a slew of retail earnings that we've watched. Our panel takes a closer look at some of those numbers. The watch list. We'll be right back.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, not a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm your financial consultant.
Welcome back to the watch list. I'm Nicole Petalides. A closer look at the markets.
Come on,
Right now,
break out.
nothing is
I'm waiting
listed
for you
trading today.
to.
Before the closing bell rings, we've already had records for the S&P and the Dow Jones Industrial Average. Yesterday, you had the SP, NASDAQ, and Dow. So up arrows continue here. S&P's up about 0.1% at 7607. The NASDAQ gaining 84 points, 0.25%. The Dow up almost 0.5%, 51,291. And tech has pulled back a little bit, but certainly has been the big leader this week, yesterday and today. It's helped to give a boost to the markets. But as I noted, it's come back off the earlier highs, some even turning into the red, for example, like NVIDIA. So there you have it. And we'll wait for Palo Alto after the bell today. All right, want to talk retail. We've gotten a closer look at the consumer behavior over the last week or so. Retail earnings have been coming in. We've heard a bunch of the discount retailers as well. Want to bring in our panel to hear what they think and have a discussion. Brett Flickinger joins me here at the desk, Managing Director, Strategic Resource Group, and Brett Husline, Equity Analyst, Consumer Equity Research at Morningstar. So glad to see you both. Thank you. So, Brett, I'll start with you. When we think about the consumer, I'm hearing words like resilient. Even one of them, I think it was Home Depot, who said ours are among the healthiest. But we're also hearing that consumers are looking for value and could even be strapped, particularly for the lower income consumers. What did you find when you looked at some of the earnings reports?
Yeah, first off, Nicole, thanks for having me on. Essentially, from my, I covered a lot of consumer defensive retail names, so Walmart, Target, Costco, Dollar Tree, Dollar General. And what we're seeing really around, I guess, around the board here is consumers are seriously looking for value. Consumers are looking for it, and it doesn't really matter as far as, I guess, the demographic or the income cohort. We're seeing consumer trade down, trade in from all respective cohorts. Even today, too, with Dollar General, I'm pretty sure they noted that some of the largest gains they were seeing as far as traffic was coming from their highest income cohort for there. Same thing for Dollar Tree as well.
We were taking a look at Dollar Tree. Some of the prices went higher. We did see people shopping at the same-store sales was up 2% at Dollar General. When you think about Dollar Tree, Dollar General, Bert, you want to comment on either of those?
Yeah, I think the overall theme, Nicole, is run from retail, especially chain dollar and chain drug. And as Morningstar was referencing, great values with price impact, Walmart, Costco, Target staging a comeback, TJX, where they're looking for values.
JP Morgan today.
Panel, value's the place to be, but
that would have been a good
running
one.
into an accelerating retail ice age. It's the University of Michigan Consumer
I think
Sentiment
I'd ate that
Report.
one up.
It's at an all-time low at 44, where it was over 100 2 years ago. So consumers are more cash and credit constrained than ever before. So they'll find value in a number of places, but they'll find value more with the big chains that have more buying power to pass along lower prices to raise shoppers' standards of living.
You did also note in the Dollar Tree report that one of the red flags was that customer traffic dipped. And sometimes what we're seeing is that has been the case here, Brett. Customer traffic has dipped, but the ones that come spend more, and they're probably maybe spending more but getting the same as they used to because of inflation. Some of your thoughts, Brett, when you think about some of the things that Bert just said about consumer sentiment, for example, being the lowest point.
Yeah, I would say consumer sentiment is reasonably, it's pretty low right now. I mean, it comes down to really a lot of people are feeling their wallet is stretched. You know, when they're talking about higher income and higher income cohorts, I mean, that might not mean necessarily the same what it used to mean. And we're seeing that across the board here. And I guess when we're referring to back to Dollar Tree, looking at like those traffic and those ticket gains, I think on a company specific level, they're really doing a solid job as far as like their execution on the merchandise they're offering on like a multi-price tiered. So I think they're seeing still a bit of that traffic lag behind a bit from the perspective of, you know, they broke the dollar a few years back, and they're starting to, I guess, you know, increasingly offer a bit more of an assortment at different price levels. But I think it's kind of resonating with consumers right now is everyone's just trying to look for, I guess, a really good deal wherever they can find it, and whether it comes in a different shape or size or pack size, or at a different store, in which case maybe Dollar Tree. Then they don't mind going there as long as they're able to find, I guess, some strong value in a deal.
Yeah, Brett, you also cover Walmart, Dollar Tree, Dollar General, you said Target and Costco. From some of the other reports that came out earlier, like Target or Walmart, what were your takeaways from those?
I think as far as looking at whether it's the big box names or whether it's the smaller box names, I think everyone is kind of feeling a bit of the pain here from higher fuel costs, transportation, and tariffs. I mean, even when it came down to whether it was Costco or whether it was BJ's, like in this case, same with Walmart as well. It's like this was something that was very much noted on their earnings calls, and we were able to see in their results, even with this strong and high degree of purchasing scale and negotiating leverage with their suppliers. It may not always even be enough necessarily to offset the investments in price, because at the end of the day, Walmart and Costco, they're really notable for just, I guess, providing the strong value and the low prices towards their consumers. In order to be able to provide that value, it's like it has to come from somewhere at the end of the day. So yeah, it's a trend I'd say that we're seeing across the board here.
And as folks, Bert, look for value, you said it may not even be the dollar stores that are automatically the cheapest option. At the same time, you said household debt has been on the rise.
To me, like we're breaking a major
Households
support.
on the run, and when you have 70% of
On
Americans, now 80%, paycheck to paycheck, buying now, paying later, they're postponing payments, and Nicole, they're actually going without meals.
Oh.
And you see the
Who's doing
numbers
that?
in casual dining and fast food. So before COVID, 11 out of every 21 meals were eaten away from
/ES
home.
just got triggered.
Now only 1 to 2 meals are eaten at home, and so people are buying to eat at home, but with what they buy at a lower price in a supermarket, which is about 70% less, they still can't afford to feed the family 21 meals a week.
Oh.
Bert Fleckinger and Brett Husline, thank you both very much. Great to see you both. Really appreciate it. Good retail story there. Thank you both. Coming up, we'll take a look at the sectors on the move during today's trading session. We'll also spotlight an ETF that aims to own all the must-have stocks in a portfolio. The watch list will return after a quick break.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
This is incredible. It's where I
You
get all
got
your
VWAP
office
coming
supplies.
up over here.
Your golf balls, your fancy coffee, your giant TV.
/ES has got the VWAP. not an 8. Come on, back off, man. You can't be doing that shit. Come on. What you gonna do? These little J-hooks rebound pretty well. Here's one with a nice little hammer on here on the end. Milch. Come on, baby. Do something.
did say diversification was built for a world that does not exist anymore, and it's all about managing fear. Can you explain that?
Yep, that's true.
I'd be happy to. So one of the things, the problems that most investors have today, or many investors anyway, is they're using a roadmap, Nicole, that was built 30, 40, 50 years ago. And the entire system is built on, hey, let's not lose money. Let's spread our money around. Well, our data shows over the last 100-something years that there are roughly 30,000 stocks that have been traded or listed. Fewer than 1,000 of those have actually made money. So the system is set up to spread your money around with the hope that you'll stumble into some of the big movers. Yet the biggest and most successful investors of our time are always concentrators. They're playing proactively to win. So we've departed from convention. Our attempt with Fitz is to go ahead and focus on those names from the very beginning, because we'd rather move the needle from the beginning than stumble into it.
Keith Fitzgerald, principal of the Fitzgerald Group. Thank you so much. I appreciate it. It's good to see you. Thank you. We'll watch for Fitz, the ETF there. Coming up, we'll take a closer look at some of the large options trades to watch in the market. Tom White will join us. And
Now
we'll take a closer look at big moves for Amazon, Alphabet, and Intel. The watch list. We'll be right back.
Minutes of the trading day, that's when markets make headlines.
Still got to go with that there 200.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares. Makes a huge difference when you have someone that actually cares.
Welcome back to the watch list. It's time for Big Moves, where we highlight outsized options trades taking place in the market. Joining me right now, Tom White. And I say welcome back to you. I haven't seen you lately. Welcome back, Tom White, glad you're here. Let's take a look at Amazon, which right now is at 258. It's down 1%. And you were combing through and found an options trade that you're going to share with us, neutral to bullish, I believe.
Yeah, Nicole, it's good to be back. You know, if you take a look at Amazon, it's pulled back about 7% from those all-time highs that we hit just last month. This comes on the heels of pretty good earnings. Their growth rate on the AWS cloud side of their business was about 28%. That was the biggest gain as far as growth in that area of their business in about 15 quarters. So we're seeing a re-acceleration in AWS. They're also doing well on the advertising side. They reported over $70 billion over the fiscal last 12 months. So that continues to increase at over 20% gains. And then the Trainium chip that they've got going on, that's showing solid growth also. So there's different segments within their business that are doing real well. The retail side of the business is, you know, which is a majority of their revenue, holding up well, as are the margins at this point. They did just announce overnight Prime Days are coming June 23rd through the 26th of this month, so that should be a boost for them in the typical summertime for them as far as the retail side of their business. But with the pullback that we've seen, the stock's still up about 12% so far this year, but off of those all-time highs by about 7%. I think there's some traders trying to take advantage of this, and a lot of times when you miss big rallies in names like we've seen in Amazon over the last year or so, people start selling cash secured puts, and that's what I kind of picked out here today that kind of stuck out to me. And this was out in the August monthly options, so 80 days to expiration. Saw a trader sell 5,000 of the August 230 strike puts out of the money to the downside here. They collected an average credit of $6.63 on those puts. That's what they could potentially profit per put that they sold. So this takes a break even where the trader starts to lose money below 223.37 over the next basically 2.5 months here. That's about 13% below the current share price. So on the weakness that we're seeing today and over the last couple of sessions, we've seen some traders trying to take advantage of that where, hey, if the stock does fall below that 230 strike into August expiration over the next 80 days, they'd be willing to buy the shares, but they're buying the shares at that break even of 223.87 or 37. That's 13% discount to where it's trading today. So if the stock does not go below that 230 level, they just get to keep this massive credit that they collected on a per put basis. So yeah, selling some cash secured puts in Amazon, trying to maybe get in on this dip that we're seeing today.
All right, and next up we look at Alphabet. You've had a neutral to bullish trade. Alphabet's been in the news, an equity raise that they're doing. The stock is up 3 months about 20%, but has since pulled back from the highs. The trade you found, please.
Yeah, it's in correction territory. It's down 10% from those recent all-time highs that they had in May also. And this big capital raise is helping to fund this AI infrastructure build-out. Remember, they reiterated that, hey, in fiscal year 2026, that they're going to spend $180 to $190 billion. So they need some financing. They're getting some help from Berkshire Hathaway. They're taking $10 billion of this capital raise also. But yeah, if you look at the different segments within this company, they're all firing on all cylinders, whether it's the Gemini side. The cloud growth is the biggest cloud growth out of all the major players, including AWS and Microsoft's Azure. That's nearly 50% growth that they had last quarter on a year-over-year basis. So they're doing well in different segments of their business, but this capital raise, putting a little dent in the shares today, stock down 10% from those record highs. But we did see the same type of setup here that we did in Amazon, where people are trying to sell some puts. They went out to the September monthly cycle here, so 108 days to expiration. A trader sold over 10,000 of the September 360 strike puts. They collected an average credit of $22 on these, so pretty hefty option premium that they're selling. So that takes a break even for this trader where they start to lose money down to $338 over the next basically 3.5 months. That's about 7% below the current share price. So maybe same type of setup where they're taking advantage of pullbacks in some of these big cap tech names, selling downside puts with the expectation that, hey, it's going to stay here, move higher, or go lower where they can buy the shares cheaper.
Understood. And last but not least, we look at Intel, which had, since its last earnings that it reported, it had a gap up and then moved up to the high of 132. It's up over 400% in 1 year. What kind of trade did you find today?
Yeah, still up about 190% so far this year also. And I think that's the same thing. This trader's maybe taking advantage. The stock's pulled back about 19% from those all-time highs that we saw just a couple of weeks ago. So maybe taking advantage of that. Call volume is more than triple what put volume is today. So even on a down day where Intel's down 2%, they're buying a lot of calls, maybe trying to take advantage of this pullback. One that stuck out to me was out in the September monthly option, so 108 days to expiration. Trader bought over 16,000 of the September 110 strike calls, paid an average debit of about $16.80. So they're paying for this duration because they've got over 3 months in this position. The break-even where this trader starts to profit is above 126.80 over the next 108 days. That's about 18% above the current share price, but within that range, those all-time highs that you mentioned of above 132 bucks that it recently hit. So a lot of call buying in there on this down day today, Nicole.
Tom White, thank you. And thank you, friends, for joining us right here on the watch list every day. I'm Nicole Petalides at 9 a.m. and 2 p.m. here on Schwab Network, and you can get our app. It's available in the Apple App Store 24/7, schwabnetwork.com. Market on Close is next.
Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
Yep.
Moving
Again.
funds between your accounts is easy.
Oh.
Cash moved to your brokerage account is available in seconds.
I'm at
That means you
225.
can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Jimmy's green.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Mom, when my grandparents moved here.
Oh boy.
I don't even know.
There we go. $76.10s are at 240. I think I do need to sing. But now, let's go. Let's say we're at a pivot point. Here comes Marley.
Trading 0.1% higher at 76.08. On the Nasdaq, we're 0.25% higher, 30,595. The Dow up 0.5%, 51,332.60, and the Russell 2K is up more than 0.8% on the day, 29,30.09 right now. As we take a look at our 10-year, we're slightly lower. We're at 447. The dollar's at 99.18. Gold is trading 0.25% higher, 45.1770 a troy ounce. Crude oil 93.84 a barrel. That is slightly elevated. Bitcoin has fallen under that 70,000 mark. We are now at 67,435. We haven't seen numbers like that since April. That is a 6% drop off since last April for those Bitcoin numbers. Sam, I do want to check in with you though and see what's sticking out to you on this session, because we've certainly had no shortage of things to keep our eye on today.
No, absolutely, Molly. We're looking at software and cybersecurity stocks today under pressure ahead of some key reports earlier, or I should say later. Palo Alto down over 2% going into its print after the bell today. That's expected to be a strong showing. Shares hitting a new all-time high yesterday, more than 60% in 2026, as some of the negativity in the space could be stemming from Anthropic's announcement today. It said another 150 partners in more than 15 countries will gain access to Mythos. Remember, software stocks struggled when Mythos was first talked about in the market because the dominant theory at that time was that this new and very powerful AI model was going to be a threat to cybersecurity names and would basically disrupt the industry. Although cybersecurity stocks have recovered in recent months.
$3.20.
Palo Alto and CrowdStrike have both just come off their best months ever, both up around 60% in May alone. But for now, I'll send things back over to you, Marley, with Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, Jenny Horn, co-host of Next Gen Investing, joining us here in headquarters to take a closer look at some of these names that are on the move. And we have to, of course, start with Hewlett-Packard Enterprise. I mean, just blockbuster earnings report, incredible beat and raise quarter, and a huge pop to the upside, major reward for it.
I mean, absolutely, and I think that definitely giving numbers to back what was a huge blowout as far as reaction goes.
It's been a long day. Finally, she breaks the 200 SMA. The crowd doesn't know what to do. How's he do it? No, excuse me. Excuse me. Just looking at this right here. Perfect. Triple top break. Wick. And then bam. That's pretty IWM. If I saw that. Come back to kiss the 9 here.
Yeah, this is really interesting. A story that's more in the weeds, but I do think it signals a massive theme that we're seeing right now. A lot of really cash being raised for AI. So Alphabet, coming off of one of its biggest debt-raising binges in corporate history, is now tapping, as you said, equity markets for another $80 billion this week. The group's transition to stock sales does show this massive round of debt and issuances that it did include a $17 billion multi-part offering last month that targeted countries like Japan, Switzerland, and Canada, as well as the EU. But collectively, they've now raised roughly $60 billion in debt sales in just the last 4 months, making it one of the biggest corporate borrowers on record in terms of single-year issuances. It's also now raised more than 4 times its collective debt offerings over just the past quarter of a century. And they did say back in April that their 2026 capex plans would be in the range of $190 billion. That was more than double its 2025 tally, with the CFO actually indicating 2027 will be even more significant. And so they did buy roughly $46 billion of their own stock back in 2025, another $62 billion in 2024. But historically, when we see a company as cash-rich, frankly, as Alphabet has become, when they decide to sell now massive amounts of stock, it does oftentimes signal that a short-term market top could be near. I would say that with a company like Alphabet, it's not necessarily indicative of that, but it is notable that they are choosing to get ahead of their massive equity raise and ahead of some of these potential very volatile, very costly IPOs coming, expected at least in the next few months. And so it's an interesting story, and it was interesting to see the way that it seemed like the more and more the day went on, the more this pressure sort of built around this, because again, this is now a very leveraged play into AI without the real guarantee, as much as markets can't guarantee anything, but really you cannot guarantee that we'll continue to see this level of spend, but obviously they are hoping that we continue to do so.
Yeah, I mean, a 3% move to the downside on this news, not hugely significant for a name like this, but it is bucking the broader trend in the market today. And as you said, a little bit more in the weeds on that one, so thanks for the breakdown on that one. But Marvell's very overt, their move. They have a new all-time high today. Significant pop to the upside after Jensen Huang made a comment that it is going to be the next $1 trillion company.
I mean, definitely if it helps to get some credit from one of the most important and influential names right now in tech, being CEO Jensen Huang, but it's amazing. This move has actually only strengthened throughout today, where like HPE is giving back some of that initial pop. Not really seeing that move today with Marvell, as it's been surging hugely after the pretty major endorsement from Huang, where he did say, speaking at the Computex conference in Taiwan alongside Marvell CEO Matt Murphy, that there is going to be this massive need for networking infrastructure to connect data centers to help power AI. So they did say that's why Marvell is so essential. To quote him, that's why you're going to be the next $1 trillion company, were Huang's words. But even ever larger AI data centers do require things like these optical transceivers to more efficiently transfer data. So Marvell does make digital signal processors within those transceivers, and they've been busy. We saw them acquire the optical networking company Celestial AI for $3.25 billion. We did also see the announcement of the acquisition of XConn for $540 million. So NVIDIA has also themselves invested $2 billion in Marvell as part of this broader collaboration.
Something about her voice. It hurts. 7610. Things kind of woke up there. The AMD had a little bounce. Huh. Post 12 minutes, power hour. They're interested.
All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Market on Close. I'm Sam Bartas on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's look at these markets because we've had more records once again here for the S&P 500. It looks like we could be in for a record close if we stick around these levels for the S&P benchmark and the Dow Jones as well, sitting up 0.4%. We managed to reclaim that 7,600 level on the S&P earlier today, around mid-morning, and have managed to hold these levels. The Nasdaq 100 has been outperforming as well because of the fact that we have seen that nice rally, particularly across technology today. It's been interesting looking at the chip sector, which has, of course, been in rally mode. You've got the
definitely
SOX
stay
index, for
above
instance,
this.
up around 5.5%, but NVIDIA, interestingly, has been losing some
7,600.
steam throughout the course of the session. And in fact, if you look across the Mag 7 cohort, you've got a pretty split picture with Tesla, Apple, and Meta higher, only just on Meta, but the rest have been lower. And of course, we are seeing the carnage in software stocks today, maybe on some of this Anthropic Mythos news. But the Russell 2000 up 0.9%, so that's our outperformer, and that's making up for some of the lost ground we'd seen yesterday, of course, as yields have been sort of coming off across the curve here, and we've now got the 10-year at 4.45. So let's just take a look at some of those futures products, because obviously that's been driving a lot of the action. It's interesting that stocks are rallying, even though crude oil is picking up just a bit here. We're at almost 2% or so at $93 a barrel. So it does look like as much as we're off triple digits for WTI, oil remains elevated, and so do yields. But it's okay because stocks are seemingly rallying anyway on all of these extreme moves we've seen in some of these tech stocks. That really is the momentum trade. And as Marley pointed out, Bitcoin just continues to struggle here. We're at multi-month lows at this point, down 6%, very much sub 70,000 right now, as we can see here. And the US dollar's firmed up a little bit, and that perhaps has something to do with the strength of the jobs data we got this morning. So let's talk about that, bring Marley back into our conversation, turn our attention to the labour market with our next guest, Matt Miskin, Co-Chief Investment Strategist at John Hancock Investment Management. Matt, always nice to see you. Thanks so much for your time. So job openings are increasing here, the highest in nearly 2 years. What is that telling you?
Yeah, well, you got to look underneath the hood of the report first, and really, this is a huge blowout number. So the estimates were for 6.8 million. We're getting 7.6, but 700,000 jobs came from one industry, and it's professional services. So it's like accounting and legal and finance. And the twist to this was the industry that was supposed to be knocked out by AI. And it was the largest portion for job openings. So in terms of the openings, you got to take it with a grain of salt. It all came from one place, and it looks really concentrated.
That's interesting.
The other parts of the report, the hiring rate really didn't tick up. The quit rate didn't tick up. So you're still seeing this relatively loose labor market, not a lot of wage growth. And that's why I think the market really didn't move too much on it, because it was really predicated on one subsector, and every other metric on the report still showed this kind of relatively loose market.
So, Matt, you said let's look under the hood here, and I think that's really important because obviously it's a blowout number, like you said, on the headline. But as we look lower, you mentioned the actual hiring, it's down. I mean, the quit rate's pretty much stagnant. Walk us through this paradox here. I mean, what are we seeing? Are employers really genuinely starved for talent right now, or are these ghost postings?
Yeah, it does make you wonder, and that's why I keep going, a grain of salt, back a truck up of amount of salt that you can really pour on this report, because and we'll have to see what the jobs report on Friday looks like, because that's 100,000. But we look at this Indeed job posting data series. It's right on the Federal Reserve website. It's free. That actually showed a modest tick up, but it's still at really low levels. There's Link Up, which is another data series. So that kind of looks at, job postings online. It scrapes for all the job postings. That actually showed a meaningful decline in April. So to your point, it could be ghost postings. It could be just kind of this kind of fluke. But the jobs market really isn't as strong as I think this report has shown. And I think as it goes to the Fed or the markets, this isn't a great environment for the Fed to aggressively be raising rates or potentially even raising rates.
I wouldn't raise
an
rates.
Inflation problem manifesting itself through the energy sector, but the underlying economy outside of AI is not as strong as the markets might reflect.
Interesting. Just walk us through that, and I mean, just the house view on where you stand on the rate trajectory coming from the Fed off the back of some of this data, because there is a thinking out there that the jobs market is at least stable enough for them to have the headroom to be able to focus on the other side of the dual mandate. And I mean, some people are calling for a July hike.
Yeah, no, I mean, around the world, central banks are now looking to hike. I mean, the ECB is forecasted a hike here in June. We think that is, really too soon for the Fed to hike in terms of the summer. But as we go through the year, we think that, it's a possibility they could hike once just to kind of put that signal out there. But for the most part, the Fed could use forward guidance, let the bond vigilantes do their job. So what does that mean by that? What do I mean by that? It means let the bond market reprice to have higher rates, steepen the yield curve, and let that weigh on the economy a little bit. See how tight financial conditions can get. And then hopefully the Fed can just actually be on hold to the end of the year and then maybe even go back to cutting next year. We are in the midst of a fiscal sugar rush between tax cuts, tariff refunds, accelerated tax capex, depreciation. So once this runs its course, we actually think the economy slows a bit and actually enables the Fed to cut again back into 2027 as it would be.
And Matt, I want to jump back to something you pointed out in your first answer about how we had professional business services pretty much single-handedly driving this beat here, unexpectedly so, where we saw on the flip of that finance and insurance shedding north of 100,000 jobs. What is driving this massive divergence that we're seeing? And also, it was unexpected. That was an area we didn't expect to add jobs, and it's where we saw significant adjustments.
Yeah, we think that the AI is taking jobs narrative is actually overblown. And you're just seeing it in the data where software jobs are holding in okay, excuse me, and actually some of these business services jobs are holding in okay. So it's a fun story to tell. It's one that you do hear these anecdotal evidence of, but in terms of the underlying data, it's just not there. In fact, the technology sector is booming. The CapEx is booming. And so, if anything, that's holding up the economy. If anything is right
Here we
now.
go.
And there is some jobs being created. It's not as much as usual. Usually, when earnings growth is
The resistance.
good, job creation is much higher. And this is a very unusual macro environment. But to us, this jobs market isn't as strong as this report has shown. Outside of AI, there's not a lot of growth. But there's also, you got to kind of lean against that narrative that AI is taking jobs. In the United States, the creation of AI and much of it being here is helping the economy, if not the most out of anything that's happening right now.
Yeah, I was listening to Sam Altman yesterday, who had basically said that the companies embracing AI are often the ones that are hiring more workers, whereas the firms that continue to blame AI for the layoffs are not using the technology extensively. And I thought that was really interesting because there's a lot of misconceptions about, the kind of companies that are blaming AI and kind of getting rid of talent to replace their jobs with robots. But obviously, JOLTS is just one part of the puzzle this week. We've got ADP out tomorrow. We've got the jobs on Friday. What are you expecting from that?
Not bad reports, but not great either. And to me, the healthcare sector has been the savior of the jobs market. Every single jobs report, the healthcare sector is huge in terms of its contribution. This isn't a massive tailwind to the economy, but it helps. But outside of that, I'd say it's meager jobs growth. Again, it's hard to see the Fed really aggressively hiking into this kind of a weaker labor market. It's really a frozen jobs market. If people leave, they're not rehiring. And those that are using AI are more productive and they're running more efficiently. And that's how these corporate profits are as strong as they are. I mean, it's one of these things where the stock market's doing well because corporate profit margins are as wide as they've ever been. Well, that's because these companies are running lean and they're not hiring as many people. But those companies that are able to utilize AI, leverage it, and have people be more effective, they're the ones that are succeeding today.
And so, Matt,
Very
that's the
interesting.
bottom line here. We get the non-farm payrolls report on Friday. It mirrors the strength that we saw in JOLTS. Let's say this wasn't a fluke. We're not going to back the truck up on it. Does the market then need to brace for a more hawkish Fed, or is that just not a possibility in your viewpoint?
No, you're right. I mean, this will be the third jobs report, if it is a good one. That'll be a nice string here. And you're seeing the fiscal side between the tax cuts, the tax refunds, the accelerated depreciation is all hitting the economy right now. And the Fed has to basically tap the brakes as the fiscal side puts the gas on. So if the government is going to provide all this stimulus to the economy, that's gassing growth. And as that's happening, the Fed's almost got to tap the brakes. And so you've got one hitting the gas, one hitting the brakes. It makes a tricky situation. But in our view, you can't, if you're going to have all this spending, you're going to have the economy accelerate, the Fed's going to have to do something likely, at least talk about hikes. We don't know if they're going to have to go through with it yet, though.
Yay.
As you say, maybe the bond vigilantes will do the Fed's job for it. Matt, always appreciate your insights. Thanks so much for jumping on with us today. Matt Miskin there, Co-Chief Investment Strategist over at John Hancock Investment Management. Coming up, we'll discuss the state of fixed income and how elevated inflation and a new Fed chair are impacting bonds. Market on Close will be right back.
Well.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Dollar General is lower today after beating bottom line estimates but missing expectations for the first quarter on the top line. The discount retailer saw revenue rise nearly 3.5% from the prior year, but same-store sales growth was about 2%. Dollar General did raise its full-year earnings per share guidance while affirming its 2026 sales outlook. It is weighing broadly, though, on these discount retailers today as we take a look at the discount retail segment here. Dollar General trading down almost 3% right now. Dollar Tree down about 1.5%. We've got Five Below down 2.5%. And Ollie's trading down about 1.9% right now. So a tough day on the back of those earnings for Dollar in terms of equities, what have been some of your thoughts of our trading?
Yeah, well, we think that, the type of volatility that you're seeing in trading, certainly in bond yields, has just been the increased level of uncertainty, the more worries about inflation being persistent and what the Fed will potentially do next and the impact that has on markets.
I don't know if you caught our last guest, Matt Miskin, Joanne, but he was sort of suggesting when I asked him about their sort of house view on the future trajectory of rates, well, maybe the bond vigilantes will do the Fed's job for it and allow them to sort of sit on their hands while they watch both sides of the dual mandate, see how things go, and then maybe they might actually even be able to cut come next year. I mean, I don't think that's really what the market currently is pricing in, but do you have a view on that?
Well, I mean, rates are definitely elevated, so the bond vigilantes are doing some of the Fed's job for them at this point. And, the markets aren't waiting for the Fed to raise rates before taking matters into their own hands, and that's what we saw with the type of volatility and the higher yields that we saw in the 30-year and 10-year in particular.
And Joanne, when you look at the Fed's potential move forward, considering the data we got this morning in terms of the labor market, and we've obviously got the jobs report coming out on Friday, and then we'll get some more inflation data next week, with rates being elevated, we're signaling potentially this higher for longer scenario. What is your expectation out of this June meeting and Kevin Warsh's first meeting as the head of the Fed?
I think they have the room to continue to wait to see how things develop before they take action either way. I mean, definitely don't foresee a rate cut at the next meeting, but also don't foresee them talking about raising rates either. That would be, I think, more of a later this fall kind of topic that would become more serious then.
Yeah, I think the expectation is for at least a shift to a sort of more a neutral type of tone, if it's not a tightening type of bias there. Where are you seeing the flows right now? Because a lot of my guests say they like duration with the current elevated yields, particularly given where we've come from in recent weeks, but other guests just wouldn't touch it with a 10-foot pole right now.
Right. Yeah, because it's pretty volatile. You can have really good days or really bad days if you're very long in duration. So I think that where we've seen a lot of flows into ETFs this year has been kind of more short to intermediate duration types of ETFs. And that seems logical based upon there are reasons for higher risk premiums and more uncertainty and more volatility in the long end.
And Joanne, one of your recent pieces argues that a high yield may actually be a better allocation than long-dated treasuries right now. And forgive me if I'm wrong, but I don't believe that's a consensus view. So just walk us through that thesis.
Well, yeah, I mean, it's basically the numbers bear it out over, the recent history, especially with the type of volatility that we've had in long dated securities, U.S. Treasuries, that high yield, because of its higher coupon, it's actually exhibited less volatility in terms of returns than you've seen in long Treasuries. Better returns, better coupon income, more reliable with less volatility. So as much as it's counterintuitive, it's actually how it's working.
And why invest in fixed income ETFs rather than investing in individual bonds?
Well, you get the diversification of the ETF vehicles, and you get better liquidity than you probably would get in individual bonds. You get more choice in terms of where you want to be. Like we have 20 different funds across different sectors of fixed income that enable investors, they can be precise without buying individual securities. They can focus on high yield, private credit, emerging markets, but in a more precise way without the risk or illiquidity of individual investments.
And Joanne, you mentioned emerging markets there. How are you looking at emerging markets right now? Where are you seeing the opportunity there?
Yeah, the best value that we see there, well, I mean, it's been a very strong performing asset class over the past several years.
Spy off the VWAP.
And it continues to be strong as well this year. But where we're seeing the most strength is in shorter duration emerging markets. We have a fund, XEMD, that focuses on 1 to 10 year sovereign credit risk, U.S. dollar denominated. And that's it was our best performing fund last year. It's our best performing fund year to date. It has, strong, coupon income, and also has experienced price appreciation as well.
Oh, really?
And there's an argument to suggest, at least some out there, that some of the developed markets have been acting like emerging markets recently. I won't name any names, but I had a guest on this morning who said the 640 portfolio is alive and well. What are you hearing and seeing about that sort of more traditional approach, particularly if you're invested in technology stocks right now? You've been doing pretty well.
We've been doing pretty well, but it's very concentrated, and there's a lot of risk associated with that. And so that's just a risk that you have to be willing to take. That is, as well as it's done, there could be the reverse of that.
great to talk to you. So glad to have you back on the show with us. Sadly, we've run out of time there, but always appreciate you joining us. Joanne Bianco, partner and senior investment strategist at Bond Blocks Investment Management. Coming up next, we've got Options Corner coming your way. Rick Ducat will be joining us here in our Chicago studio to break down the options activity we're seeing in Broadcom ahead of its earnings tomorrow. That's next on Market on Close.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Vulnerable.
Had a stroke? Yes. Now we're in the car together almost daily. I started to realize what
Jim.
I pick up from my dad. He's been with Schwab for a long time.
Jim, what?
Financial consultant I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Yeah, hand over another couple $100,000.
I'm Kevin Green, and I track options flow daily.
We'll move them over here in this
who's selling
fund.
and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
We'll take a little bit of that and put it over there. Apple and Tesla were the green ones today.
Learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Welcome back to Market on Close. Broadcom set to report its earnings after the close tomorrow.
Ooh,
Analysts are
big it.
expecting adjusted earnings per share of
AVGO.
$2.40 on revenue of more than $22 billion for the chip giant. The bar will be very high for Broadcom's report, with the company trading at its all-time high and up nearly 40% year to date.
Yes.
So let's take a closer look at Broadcom now in Options Corner. Joining us, Rick Ducat, our lead market technician, for that closer look. Now, Rick, as we talk about Broadcom, I just highlighted some of the action that we've seen on this name, but as we look at it against the broader market and the sector, how is it stacking up?
Well, pretty much most of these chip names are outperforming the tech sector and the broader market. Broadcom specifically up 92% during the past year, underperforming the SMH semiconductor ETF, which can probably be forgiven due to the extreme strength of the memory chip names. If you were to compare Broadcom more specifically to the other names in kind of the fabless CPU, GPU space, still a bit of an underperformer, though still kind of a laggard here, Broadcom, all the way down here in red versus the likes of Marvell, AMD, and Intel. So still, though, very strong gains in this name during the past year, even as it remains something of a laggard in this group.
So as we look at it on its own, though, and we look at the technical setup going into earnings with some of that growth that I highlighted, what are you seeing? Because, I mean, I see we have an upward sloping channel, but then we've just shot to the sky right out of the channel.
Right, so what happened recently is that we had a notable old high point here at our green line near about 415. You could also say there was another important low point here before we had our gap down near about 394. So fast forward a little bit, we had this period of gradual declines before a very sharp push to the upside that then translated into this somewhat range-bound area between about 407 to about 440 or so. So then we had another push to the upside. You could have drawn, as you said, this channel type shape here, connecting these lows, duplicate it, put it across those highs. We had an upside breakout from what was already more of a bullish type of pattern. So pretty interesting here 488.82 was our intraday high, and we've come almost close to closing the gap that was formed today. So that area here where the gap began near 466 remains a level of potential support to watch going forward here. So when we think about our moving averages that we follow here, our 5-day EMA in dark blue comes in at 452.64. So that lines up with the upper boundary of that channel, also kind of roughly with some of the old highs that we saw before we had our push to the upside. RSI, our measure of momentum, above the overbought area. Not typically what you see. Momentum often cools down a bit when you start to have earnings on the horizon here. But in this case, an atypical behavior here, momentum accelerating heading into earnings. So we'll have to see if that holds on after the earnings event does actually happen. That can be a major catalyst to the upside or the downside. When we look at our volume profile, during the past few months here, you can see our range-bound area corresponds with a pretty large node here, this blue histogram on the right side of the screen, between about 412 to 434. That's where the bulk of the trading activity took place recently. It lines up with that range. Pretty common that you would see something like that here, but it does give us extra emphasis on this area as a potentially supportive location.
And as we look at the options action, you mentioned sometimes we might see the momentum start to slow, but we didn't in this name. Are we also seeing momentum in terms of the options trading here?
Yeah, so the sizzle today, 1.8, so 1.8 times the 5-day moving average of options volume here. The potential expected move for the end of this week, the June 5th expiration, is our orange box right here. So plus or minus about 9%, so decent sized move could be on the horizon. Meanwhile, the June 18th monthly expiration, 16 days out, is our yellow box here, plus or minus 12.6% or so. Today's trading was about 362,000 options. In terms of our volume, roughly 66% were calls, so just about 2/3. Our biggest open interest month is that June 18th expiration with about 19% of all the open interest as a whole. One large trade I saw, plus 263, now maybe not the biggest quantity here, but a pretty big dollar amount. June 18th, 360 strike calls at a 122.50 debit. That equates to about a $3.2 million debit paid here. Unclear if an opening or closing trade though.
Rick, really appreciate you breaking down the options action we're seeing on Broadcom today. Broadcom actually trading up more than 3% so far today in advance of those earnings, which of course we'll cover for you tomorrow on this show. But want to thank Rick Ducat, our lead market technician, for always breaking it down for us. And I do want to check back in with Sam, though, to see who she and George will be talking about for overlooked stocks today.
Penguin Solutions today, Marley. So George Schillers has his eye on that one heading into the close. He'll break down the news, what you need to know, coming up next on Market on Close.
Nice little support right here. What time is it?
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
How's it going?
First day, so.
Sometimes, you know.
Wow.
Try it again?
You could have done better.
Please?
Same goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls, your fancy coffee. Your giant TV. It's everything in one place. It's like...
There's a buck.
Like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
And I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. Penguin Solutions is rallying to a new record high after reaffirming its guidance and announcing a CFO transition. So George Sillis is with us, Senior Markets Correspondent, to help get us across the details here. It looks like it is a confidence guidance story here. George, just walk us through what we've learned today.
Well, I mean, this is that's been a remarkable performer. I mean, that, to say the least, for Penguin Solutions. And I've covered this company before, but it was actually formerly known as Smart Global, and essentially it's a high performance computing solutions business. So this is a company
kind of a boring day for me today.
You know, optimized memory. They also have a former LED business, which is known as Cree. But the thing about the business is they're integrating multiple technologies, everything from computing, memory, and software, high performance computing, and also factory automation. You could also consider them an innovator in memory solutions, because one of the things that's been going on is there's a lot of technologies that are developing to help bypass the aspects of high bandwidth memory, which has some latency. So essentially, you know, they collaborate with big businesses like Dell Technologies. They also compete with big businesses as well, like IBM and Systems Integrations, as well as HPE, Hewlett-Packard Enterprises. Both of these businesses, by the way, have been in the news as of late as well.
Oh yeah, that would have worked
in
real
infrastructure
well.
solutions. About other big names that they compete with, paying now.
Buck to 175
is Micron in the memory solution space as well. But
I think that would have
they
worked.
announced a CFO transition. And also reaffirming the higher end of guidance. So if you look at the guidance EPS-wise, the midpoint was around 228, high on 230. They reaffirmed that this today. But at the same time, the analysts are starting to play catch-up, because if you look at Stifel, they actually now moved their price target to $66, which is a high on the street, but they've been really behind the curve on this name, considering the price right now is still above the high end of that guidance. But nonetheless, the business has been profitable. Market cap $3 billion, sales last year $1.2 billion, estimated for next year $1.9 billion. But this is a company that's right in line with what's going on in networking, telecom, if you will, data analytics, as well as AI machine learning, especially on the inference side of the AI stack. And so this is really, I would say, a business that's starting to look like something like NVIDIA in terms of what NVIDIA is doing, which is becoming a full stack technology company, not necessarily a GPU company. And that's been really what's lifting NVIDIA shares as of the last couple of weeks.
Yeah, I mean, obviously they've got fingers in lots of pies, and all the kind of right pies, as you mentioned, particularly with respect to that, vertically integrated full stack and, the AI bottlenecks which people have been talking about, and that's really where the capital has been flowing. I mean, you mentioned some names which have made some extreme moves over the last week, George. I mean, your Dells, the HPEs today, and of course Micron as well, and we've seen the analysts playing catch-ups with some of the memory
100%.
players as well. I mean, even HPE today, I was looking at some of the price target boosts. I mean, you have analysts that are like tripling their price targets. You feel like they're playing catch-up with that name too. Any of them saying anything about the valuation here? I mean, I see it trades at 99 times PE. I mean, you know, compared to NVIDIA at what, like the mid-30s. Is that rich in comparison, or do you think that's fairly valued as far as what the analysts are saying here?
Yeah, so that may be on a gap basis, on a trailing gap basis. But if you look at, you know, Penguin Solutions going forward, at the very least, I mean, I know it's made a big move today, but based on $2.30 in earnings and yesterday's closing price now, trading around 26 times this year's earnings, next year at 21 times, but that's on an adjusted basis. They do generate positive gap earnings, but they're very low. So if you look at the sales last year, $1.2 billion, they did earn on a gap basis $38 million. So that's important in the context of improvements. But going forward, you know, we talk about this all the time, that, you know, once there's a profitability threshold that's been breached, you know, either from low losses to break even to profits, that's where you see these big moves. But the move in this company, which if you look at the last month has been remarkable, of 130%, year to date 260+%, really fits in with what's happened in these names, this group of stocks, which includes, of course, Dell and now HPE, AMD, Micron. You know, there's at least a couple dozen, if not 3 dozen, names that we've talked about on and off for the past, you know, almost 8 weeks now, since the low in late March. You know, Penguin's certainly catching a bid because of what's happening in the group. So again, you know, the earnings will play out in terms of the price continuation or pullback. That's something you have to keep in mind, especially with this business that is still small in market cap, which again also could correspond to why the price is moving so aggressively. But nonetheless, you got to keep earnings in mind, which I believe is going to be posted for the business Penguin now on the 7th of July. So something to keep in mind.
Okay, I mean, looking at that chart, I mean, it just really fits with that broader theme of parabolic that we've seen, as you say, across the space in recent weeks and months. George, really appreciate it. Thanks so much for the details. Penguin up 19% right now. Marley, I'll send things back over to you in Chicago.
Thanks so much to Sarah George for that one. We are nearing the end of our market session. Kevin Green will be joining us to break down the levels he's watching on the S&P 500, as well as the earnings we'll be getting from Palo Alto Networks and Ulta Beauty. That's all next on Market on Close.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock.
There's the 200, I
I've
think.
always seen as a force in our family, be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever
He's
have.
been there
It makes a
today.
huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
You good night's
Trading
sleep
Schwab
tonight.
is powered by Ameritrade, giving traders even more ways to sharpen
we
their
have
skills
5
with
minutes.
tailored education.
That's a beauty.
Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area.
He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution.
It's a journey.
2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
We're back here in Market on Close. I'm Sam Bardas on the floor of the New York Stock Exchange alongside
We're 5 more minutes.
Chicago headquarters. We've just got a few minutes left in today's session, so let's welcome in Kevin Green, Senior Markets Correspondent, to help close.
Marvell was the winner today.
KG, obviously, we've seen a nice little rally here. Obviously, some more records. We could be in for an all-time high as far as the close is concerned on the S&P 500 and the Dow, I believe. Just walk us through the levels that you're watching right now.
Yeah, today was actually a little bit different. We saw more of a broadening out of this rally, especially when you're looking at some of the defensive sectors and some sectors that actually have been kind of trading sideways for the last couple of weeks, especially if you're looking at materials. So we did see around 52 to 55% of the stocks in the S&P 500 in the green, but it's really not coming from the Mag 7 names. It's really kind of pushing us higher, at least for today. We are seeing to the upside earlier this morning, highlighting this 7,600 level as a key area of support. Got back down to that level, had some buyers really stepping in. And we've been really trading within a 15 to 20 point range to the upside or downside. So if you're kind of looking at the midpoint, 7610 is an area where we are pretty much trading at right now. And if we do see a breakout to the upside, 7620. What is actually also very interesting right now, volatility is relatively cheap, 15.8 on the VIX, so implying less than a 1% move to the upside or downside. But if you're looking at the at-the-money straddle right now, we're only pricing in around a 30-point range to the upside or downside for tomorrow. That's what's being priced in. So volatility or premiums, for the most part, relatively low, relatively cheap. That could also be kind of conducive for a little bit more of a stale type of market, kind of like the price action that we have seen today. Not a lot of headlines that have really moved the tape that we've seen over the last 2 weeks.
And KG, you mentioned the Mag 7 not really doing any of the lifting today. I mean, I'm just looking right now. We've only got Apple and Tesla in positive territory. You know, what are your thoughts on the action we've seen from the
That's all that too, baby.
Well, the action's actually not that great. NVIDIA started off relatively strong and actually lost all of its gains, is now trading towards the lows of the session here, down about 0.8%. You also saw some other players kind of getting hit to the downside as well. Alphabet, Google, which did see an intraday bounce, but now it's trading closer to the lows. And if we're looking at the MAGS ETF, right now we're actually trading below the 20-day moving average if we close at these current levels. And this is the first time that we have closed below the 20-day moving average since the April lows. So it doesn't mean that there's a complete trend shift, but it does kind of represent the fact that we are starting to lose a little bit of price momentum in the Mag 7 names as a whole, even though certain pockets are still showing relative strength. You are still seeing, other names like Adele. You guys already kind of talked about them earlier in the show. Adele, and HPE for that matter. Some of these other names outside of the Mag 7 that have AI exposure still catching a very strong bid. Memory is doing the same here today. You don't really want to lose the Mag 7 names too much. Even if we have a consolidation and continue to break higher, I think that's conducive for us to have a higher high than the S&P 500. It just makes it a little bit more challenging if we do see them stall out, and we're kind of relying on some of the other smaller sectors to kind of lead the way.
One more minute.
But it's interesting as to where the capital has been flowing, KG, isn't it? I mean, a lot of the analysts have been pointing out that we are seeing that rotation out of the AI big spenders, the hyperscalers, the Mag 7 into those bottlenecks. I mean, the AI infrastructure names, the memory names, the cooling names as well. And of course, that's all really been backed up by these earnings. I mean, extreme moves in some of these AI infrastructure and these kind of plays like, Dell, etc., that have been in the business of servers as well. What did you make of the software versus semi spread today? I mean, obviously that rotation out of software is a nice day for the stocks, up 6% right now. I mean, obviously leaving NVIDIA behind here, but the rest of the chips rallying. Was this Anthropic Mythos news, or was this just, the kind of rotation we've been watching as they've been doing this sort of shadow boxing type of dance?
Yeah, I think it's just the rotation trade that we've been seeing over the last month and a half or so. The software has been doing a phenomenal job over the last couple of days. We had the rebalancing on Friday as well. That was also a key driver for some of that price action that we saw yesterday. And now we're seeing a little bit.
Well, later dates, YouTubers. We'll see you tomorrow.